Good morning, good afternoon, and good evening to the rest of you. Welcome to another episode of Bitcoin Magazine Live. I'm your host, Q, coming to you yet again from my mother's basement, and I'm joined by my co-host, P. How goes it, P?
As always, it goes fucking fantastic. We got some great news stories today. Then later, we've got Evan Kaloudis joining us, creator of Zeus Wallet. I'm fucking pumped.
And then following that will be a new episode of Fedwatch with special guest, Joe Carlasare. So we got a jam-packed episode for you guys. Let's kick things off with some news and notes. We're going to start with the St. Louis Fed because I'm at this point just convinced they're trolling us. Recent CPI data and forecasting was released where they also, just for the fun of it, helped you to see what inflation looked like priced in Bitcoin. Chris, can we show the people at home the chart?
And just for context, the St. Louis Fed basically, they have the St. Louis Fed blog, and they write these articles. And the interesting thing is that recently they have started writing articles, the Fed, the St. Louis Fed, about Bitcoin. And they're trying desperately to frame Bitcoin in a negative light. And the first one they published was fucking hilarious. Like, go check it out if you haven't seen it, because it literally is, I think it was the price of eggs priced in US dollars in Bitcoin. And then the chart was a super zoomed in view of, like a specific moment in time. And the thing was, if you literally, it's an interactive chart. So in this blog post, if you just clicked zoom out a few times, it completely contradicted the frame of the entire post. We were talking about this earlier, Q, but do we want to go into the sort of lying with data and why they might be using this strategy? Or do you think we should talk about this specific graph first?
No, let's we have the graph up. Let's talk about the graph, and then we can put on our tinfoil hats. I think one thing just to quickly point out, and why, frankly, like, I see this chart and I'm just like, this is kind of irrelevant in my mind. There's a reason why it looks like it bottomed in April of 2021 and then like attempted to rebottom around October, November of 2021, because that is exactly the same time that you saw the two all-time highs. And like, that's all this is reflecting. This was just saying that Bitcoin was ripping during this time while the price of other things was maybe going up, but not nearly at the rate in which Bitcoin's price was going up. And then as Bitcoin's price went down and the price of everything went up, like, then you see this drastic, shift in the other direction, which is why it looks like what? I'd say that's 70 degrees. It's a 70-degree angle right there from about December of 2021 to January 2022. I'm going to stake my flag on that. 70 degree. Tino, get out of here. Get out of here, Tino. But yeah, that in a nutshell is just like what you're seeing. I mean, I just think they're trolling us at this point.
So we were talking about this earlier. They're not trolling us. This is an extremely effective strategy, because what they're doing is they are writing a headline that supports their specific narrative, and then that headline is getting blasted out across, major news outlets. So it doesn't actually matter that when you go and if you read the article, what I would say is I think probably 80% of people who interact with these stories, these blog posts, just read the headline. Then maybe 10% on top of that go and they actually read through the blog post, which says like, oh, Bitcoin bad, US dollar good. And then maybe like 5% go through and they actually like analyze the chart and think, it's probably even less than 5%, and think to themselves like, wait, hold on a second, this doesn't make sense. And then click the buttons on the chart, the interactive buttons, and see that like the entire frame is broken. So it is an extremely effective strategy to just present what you want to be perceived as truth, even if it's contradicted completely by the data that you are presenting. If you just say it loud enough and you say it often enough, people will believe it. So that's what I think is going on here. It's not them trolling us, it's them using a classic propaganda strategy.
I guess to a degree I understand. Do we actually think something like this works?
Oh, there's no doubt.
There has to be a degree of, the more they talk about it, the more they acknowledge its existence, you're almost validating Bitcoin and its place in the financial markets, because you have to reference it. Like the fact that you heard about Bitcoin on the mainstream news cycle in that 2017, 2018 bull run. And then as Bitcoin entered that bear market, it kind of disappeared from financial mainstream media. Like you'd watch CNBC, Bitcoin was not on their daily ticker. It was on a daily conversation talking point. Whereas today, every show on any of these financial mainstream news outlets, they're talking about Bitcoin. They in the same way that the Nasdaq's ticker comes up, the same way that Apple's ticker comes up, Bitcoin now its price action is brought up every day.
So I don't think it's that I think what's going on is they have to talk about it. Bitcoin is part of the zeitgeist. People understand that, or are coming to understand, whether they are pro Bitcoin and will live forever in the halls of Valhalla, or they are anti Bitcoin and they will, be sent down to Dante's Inferno. Everybody knows what Bitcoin is as a concept. People know or they've heard the term CBDC. I mean, it's undeniable at this point, whatever their position on it is. And so these entities, they simply have to address it. And so this is the St. Louis Fed trying to get ahead of that thing. And that's just what we're seeing. I don't think it's some, mastermind strategy. I mean, it's effective PR, but I think that's all it is. They have to talk about it. So they're doing it.
I just think that the fact that they have to do this just further validates Bitcoin. I think this is a net positive. The fact that they have to acknowledge its existence on a regular basis, even if it's to shit on it. Like, all press is good press at the end of the day. It may trick a couple of people into believing some of the FUD around Bitcoin, but it'll also inspire a few other people to actually pause and think about this a little bit deeper and go down the rabbit hole. So if more people are inclined to learn more about Bitcoin as a result of this, I see it as a win.
Love it. Okay.
Next story.
Let's do it.
We'll make this one short and sweet, but apparently the founders of Three Arrows Capital are MIA right now. Bankruptcy court is trying to find the founders so these people can also be forced to liquidate their funds. They're nowhere to be found. I'm not saying it's fishy, but something smells really fishy. I don't know. Maybe I'm making something of nothing, but like
what I mean, it'll be interesting to see whether they show up for their, I think they have a court date, right? It's tomorrow.
Yes.
Am I pulling it out of nowhere? So, I mean, it's hard for me to imagine that they're going to completely skip town, but maybe they fucking are. Maybe they're just going to bounce the fuck out and, fade into black. Yeah, I mean, there's a CNBC article.
Actually, their hearing was 4 hours ago.
Oh shit. Did they show up?
They did not show up.
Holy fuck. That is very funny. Not a huge shock, and also infuriating. Like, holy shit. There are so many people who had their money. Oh God. That's fucked up. That is fucked up.
This was all filed on Friday, by the way. This was not this is only now being. Sorry.
We're both so excited. We're like,
the internet. God damn it.
Yeah. No. So for context, the founders of 3AC were some of the most respected people in the crypto space. They were not Bitcoin. They did sort of the classic, like, buy my shit, or I love Bitcoin, buy my shitcoin. But like, they were accepted as kind of like, these are the smart ones. You can trust them. And for them to not only go belly up, but for them to skip out on their court date, like, that is fucking wild. This is like titans in the space, in the crypto space, the bullshit shitcoin space, just like bouncing. Like, that's crazy. I don't know. I want to know more now. Like, what does that mean? What happens next?
I think this is like all happening in real time. So this is a developing story. Like, these documents were submitted to the court in New York saying that the founders' whereabouts are unknown on Friday. And then as of yesterday, they were still unknown. Hearing was supposed to be today. So my assumption is right now they're discussing next steps.
I mean, they're never going to be seen again. Well, not for many years. That's my take. It's fucked up. there a couple bodies are going to wash up on shore that are going to, you know, have the DNA and like the you know, teeth, cloned teeth, like crudely shoved into the mouth, and they're going to be like, well, it's so sad they drowned in a terrible boating accident. Meanwhile, they're actually going to be like living in, you know, fucking the Bahamas, under terrible pseudonyms, and they're
No,
going to start a new fund.
they got to center Earth. They definitely got to center Earth at this point.
You're saying they bored a hole in the surface of the earth and went down into the hollow earth, which
Yes, yes,
is a
thank you.
you insane person. There is no such thing as the hollow earth. Everyone knows that it's a flat earth and there's the ice wall and they can't get through it. And I've said many times before, we need to start mining using the ice wall around the flat earth, because if there is the ice wall, which I mean, come on, then you could just put the ASICs into there and it's like infinite cooling.
All
Think
right.
about it.
I want to go on to our next story because we have one more after that, and that's going to be the main meat of today's news and notes.
Then we'll
Our
bring it
next
back to
story,
flat earth. Okay, keep going.
the next story is the US is printing more dollar bills to send to Ukraine because we are an economy of war, not an economy of growth and prosperity. Uh, yeah, I'm going to just leave it at that. My heart goes out to the people of Ukraine, but at a certain point, you can't keep digging ourselves. We can't keep digging ourselves into a deeper hole because you can't help other people if you can't help yourself first.
I think it's actually because of the narrative, the, you know, macroeconomic sociopolitical narrative of Ukraine versus Russia. I think it's totally fucked up that Russia invaded Ukraine, to be clear. But the US is like, we have to support Ukraine because Russia is one of the major superpowers. And so we can't be seen to be weak against Russia. And like the US has traditionally been the entity that is like, we stand for freedom. And, you know, they prop up these banana republics and all sorts of bullshit. But they can't let
Mm,
Ukraine fail because they've already publicly, like, you know, said that they're going to. And also, and I know very little about this, but I believe there's already massive investments that have been made by the US into Ukraine. So they have to keep them from defaulting. There's something going on like that. And I forgive me if I'm just completely butchering it, but it's like they're basically too big to fail at this point. It's literally like, you know, Obama coming in and being like, you know, we're going to hold people to justice. And then 2008 happened and he's like, just kidding. We're bailing everyone out and no one is facing charges. You know, that's basically what we're dealing with here. Tell me I'm wrong.
fair. I mean, I personally just think it's a lot more to do with how much Raytheon and Northrop Grumman and other like just military beneficial companies and the fact that our entire economy was built on just being in war seems to be prosperous for our GDP and we have an inclination to do that. You actually tally up how much money that all of these different military contractors send to different congressional members and strangely a lot of money and it's strangely incentivizing for these companies for us to be in a war. I'm just like pointing out some dots that I think sometimes get overlooked. Like we're a war driven, war hungry country. The first opportunity we get to produce more weapons, we just go for it without a thought of our own economy or a thought of the citizens. It's really just the people with enough money to have a seat at the table making decisions on behalf of the rest of the world.
Well, I mean, you know, Safety talks about this in the Bitcoin Standard, right? War becomes a major economic driver in and of itself. So in the past, when you had, you know, uh, value systems that were based on, you know, low stock to flow, which is to say, when demand increased, it was difficult to just magically produce more of the currency. Uh, in this fiat based system where governments literally can just be like, well, we need another, you know, couple $1 billion. There it is. War becomes a really effective, the incentives change and constantly manufacturing things that require spending lots of money and then shore up the industry of war become very successful enterprises.
Yeah, I
I think
mean,
I think you're both right. I definitely want to add one thing. There's a thing called the Triffin Dilemma, which is when you are the global reserve currency, you have to export your currency to other nations in order to remain the global reserve currency. Otherwise, other things, whether they're commodities or currencies or other means of transferring value, take that place. So we just confiscated like $500 billion of Russian assets in the form of US treasuries. That's money that is not propagating through the economy, and that's money that the Russians don't want to use. I think P is right. We do have economic interests in Ukraine, whether it's natural gas resources or whatever. We also have to show that we're strong against the Russians. We couldn't win a war against the Vietnamese, the Koreans, or Afghanistan, but that remains to be seen. But also, we need to find ways to get our currency out. If Russians are no longer buying our Treasury Reserve assets or our US Treasuries, we need to send money out in other ways. So, we need to make it look like we're with Ukraine and supporting them, which, barring we're supporting someone against, Putin, who's harming people, killing people. Like, some people say it's unprovoked, other people think it's protecting himself, but that remains to be seen. But basically, what we need to do is we want Ukraine to win, not only for the economic interest. Q makes a valid point that we have a bunch of defense contractors here in the US that benefit immensely from that. But then also, if Ukraine were to win, whatever that means, I don't know if it's going to be as kinetic as we think, like a World War III. But if they win, it's like, look, the US dollar is good. The Ukrainians can spend US dollars amongst Europe. And I'm not going to say we're going to take over the EU's currency, but definitely we need a release valve, stealing from Christine Lagarde, that we need to get the US dollar in the hands to other countries in order to continue buying oil in US dollars. It's kind of a stalwart right now with Russia, basically turning off the pipeline to Germany and other countries and saying you either need to pay in rubles, you need to pay in gas or rubles, gold, or basically they say if you're friendly, you can use cryptocurrencies, is kind of what their broad strokes are. But basically, we over abused our power starting in 2001 or 2002 with, basically cutting off Saddam Hussein as well as Osama bin Laden by stealing or freezing their bank accounts and taking them off the SWIFT system. We bumped it up another level when we're doing it to a country like Russia. Like, it's one thing to do it to basically small terrorist organization or group. It's another thing to do it to a gigantic country that is Russia. So we're running into an issue that we have abused our powers for a little too long. So I'll end my rant there. If there's anything you guys want to talk on, or we can move on to the next story.
Now let's move on to the next story, which is some old man was yelling about Bitcoin again. P, do you want to tell us what this old man was saying? Do you want to unmute yourself?
One day, my friends. One day I will get this right, but today is not that day. Yeah, fucking on death's door, Crypt Keeper Charlie Munger said, "If you yes, thank you for calling this up. He literally looks like he is an animated a cybertronic creature that just has a flesh mask draped over it and has a silver exoskeleton underneath it. The point is, he said, I just avoid it as if it were an open sewer. He's talking about Bitcoin and crypto. I just avoid it as if it were an open sewer full of malicious organisms, Munger said in an interview with the Australian Financial Review. I just totally avoid and recommend everybody else follow my example. Munger continued his diatribe in the interview, calling crypto an investment in nothing that investors would have to be almost insane to consider. He says, I think anybody that sells this stuff is either delusional or evil. I won't touch the crypto. I'm not interested in undermining the national currencies of the world. What the fuck? The only thing he left off is Satan wants you to buy Bitcoin. Do you want to embrace Satan? Do you want to accept him into your heart or Jesus? That was the only part that he left off there. I mean, it's absolute nonsense.
Yeah, I mean, I don't want to give this more air than that. So we're going to move on from the story of the old man yelling about Bitcoin because Bitcoin doesn't give a shit, Charlie Munger. Also, fine. To be honest, I'm glad that you don't want Bitcoin because I can't afford to compete against you to stack sats.
Well, again, I mean, it goes back to the incentives, right? He is saying this, and we should expect him and people like him to continue to say this because he already has a public persona that's deeply invested in this thing being a bad thing. So even as, and I think he does understand what Bitcoin actually is and why it is so important, his entire enterprise is built on the idea that Bitcoin is not necessary. He's made that his brand. And so he has to maintain that even if he starts buying it.
Well, I mean,
also fuck him in particular.
I'll take your argument a step further and just say this is someone who has benefited from the systems in place. So like he's not going to want those to change. He wants to keep playing in the same within the same rules that he has played for his entire career because he understands those rules better than most people and has made a very lucrative career for it. Anyways, moving on.
Wait, sorry. One thing. Somebody made a great comment, which is he's not wrong about crypto. Great fucking point. The crypto markets are just a cesspool, but he's also saying this about Bitcoin. So we got to separate those two things out. Q.
All right, we're moving on because we need to cover this next story. CBDCs. We're going to talk domestically, and then we're going to talk internationally. But the U.S. Treasury research concluded that a well-designed CBDC may decrease rather than increase financial fragility. While this is a catchy headline, it is worth noting that what they are really worried about and what they talk about in this paper is the potential for bank runs and how a CBDC actually could help prevent bank runs on weaker banks because the Treasury Department would have this information. They would know weaker banks ahead of time, and you couldn't necessarily rehypothecate, the money as quickly if it were CBDCs. It's really just to validate their current system to continue to have fractional reserve banking versus using CBDC for anything different than what the current system is, that the current system that we have in place. So it's a whole lot of nothing. It's, I think, just a validation for the US government to say, hey, this is actually helpful for us to maintain and control power over the money and the monetary system.
Yeah, they're basically saying CBDCs are great because it allows us to have even more control over the financial future of individual people in this country. And that's really the impetus for CBDCs. They allow an unprecedented level of oversight and visibility by centralized entities, centralized governments, centralized banks into how what are supposed to be free people are using their money. And, we already see the types of incentives that I think will get rolled out with CBDCs in credit cards, right? Credit card companies drive you to use or to buy specific things, to buy certain sectors of the economy, to buy certain types of products where they have deals and kickbacks from those entities by offering like, oh, if you buy, fucking food, then you get double the points. And we're going to see those types of systems eventually in CBDCs, right? So people are like, oh my gosh, they're going to give you CBDCs and then they're going to tell you like, oh, you can't spend your money on X, Y, and Z. That's not going to happen because people will then, revolt and it's too on the nose. What will happen instead is there will be incentives, very heavy incentives and effective ones to get people to exhibit the behaviors that they want them to exhibit. So it'll be like, oh, the IRS is giving you, or, when you eventually get universal basic income, UBI, right? That may be delivered via a CBDC. And then what they'll do is they'll say, well, if you spend it within the next 2 weeks or 3 weeks, you get double the points, double the value. And that's how they will use this. It'll be the carrot rather than the whip, but it will be just as effective in controlling the behaviors of people and shackling them financially.
I'm honestly, you have me so shook right now, the idea of this. So thanks for that. I'm going to just move us to France. Chris, if you want to pull up this image from the head of the Bank of France, Jesus, I'm not even going to try to pronounce the rest of Francois's name, but Francois, yada, yada, said the work ensures that France stands ready to bring central bank money as a settlement asset as early as 2023, implying that they are really moving this forward. I mean, this guy just, that's the person I want in charge of my money. That's just a man right there. Like, Jesus fucking Christ. These people have no shame, but they just continue to really go after it. There's technology available for them to do exactly what they're looking to do. And instead of trying to understand, utilize, and build off of that, they'd rather go off and build their own shitcoin in order to maintain this control or facade of control that they have over the money and over people. So it's...
Yeah, I mean, you nailed it. I mean, look, I'm not a fan of ad hominem attacks against people. But holy shit, this guy looks like a fucking Muppet. Like, what was he thinking with that hairstyle? My God. I'm going to try to pronounce his name because I think it's very funny. I think it would be pronounced something along the lines of like Francois Villeroy du Galhout. I fucked it up. I'm not even going to try. You're right, Q.
Right?
You had the right approach.
Right.
I fucked it up.
You get comfortable with the first two, and then when you get to the last one, you just trip.
I've shamed myself and my family.
You're walking over the finish line, and then you're like waving at the person, and like you don't yet cross it, and then that's when you trip and fall. That's what just happened. I mean, look, I grew up in a generation that saw so many bank robbing movies that there was no way I ever thought that trusting a bank with my money was a good idea, and yet here I am with one too many bank accounts, in my opinion. I don't know though. They're just further perpetuating this idea that the bankers are the bad guys in my mind. Chris, it was your line next, bro.
Sorry, I was responding to something in the comments, but no, I mean, I grew up thinking there's way too many things of quicksand growing up that is not a real thing. So you don't trust banks, I don't trust quicksand, but I've never encountered it in my my years on this earth. So
I also definitely thought that I was going to have way more dance battles than I did in my entire life.
I mean, I had a lot of dance battles. I definitely, I think dancing can be
battles though.
Did I what?
Did you win?
I did actually. I mean, I think that dancing can be a really effective form of violence. I mean, there's capoeira, but I didn't even do that. I mean, this one time, I was out with some friends, and this guy who was, paraplegic, he was really throwing some shade, and I just said, "Look, man, let's fucking go." And I schooled his ass so hard. I won that dance battle, and anyone who wants to challenge me, I will flail around randomly. And if you can't walk because of a terrible accident, I'll win.
I'm so proud of you for winning your dance battle against a paraplegic boy.
Yeah.
Let's cut to a commercial break, and we'll be joined by Evan Kaloudis to talk about Lightning wallets. But before we do that, I want to remind everyone to lock in your tickets for Bitcoin Amsterdam. They are on sale now. Use promo code BMLive to get 10% off. Maybe, I don't know. If not, that means ticket prices are as cheap as they're ever going to be. So lock them in regardless. When do ticket prices go up, Chris? The next week or the week after?
Not this Friday, the following Friday.
Okay, so ticket prices are going up next Friday. So keep that in mind, guys. We'll be back. Welcome back, guys. Thank you for sticking through those commercial breaks with us. And I'm excited to introduce our guest today, Evan Kaloudis. Pete, do you want to give him a proper introduction?
I would fucking love to. Evan is a full-time baller. He is a software engineer with a cybersecurity background. He started programming when he was 13, the tender age of 13. He won all the dance battles he participated in, and he got into Bitcoin in 2014. He created an amazing Lightning app called Zeus, which allows you to connect connect to your Lightning node or your Lightning implementation, and then interact with it over your phone. It's incredibly powerful. It's super useful, and I'm really excited to talk to you about the Lightning Network and everything that's happening in it.
What's up? What's up? What's up? Bitcoin Magazine Live.
Yeah, man. So
yeah,
thank
take
you
it
for
away,
joining
Pete.
us.
Yeah.
No, I was just gonna say thank you for joining us. I'm so excited. We've only met, I think, once in person in real life, but it was a wonderful experience. And I guess I kind of want to have a far-reaching conversation here. So this will be a casual conversation. Please feel free at any point to just rest us in another direction. And I want to make sure that as we're going through all this stuff, this, which is very technical, that we're creating a space that even those who don't yet understand exactly what Lightning is can still sort of interface with it. So you are infinitely better at describing the things that we're going to be talking about than I am. So please jump in whenever I use a term that people may not know, and we'll go from there.
Sounds good to me. Let's do it.
Amazing. So I guess the first thing I want to set the stage, can you describe at a high level, what the Lightning Network is, and then the Lightning Network ecosystem and the types of applications that kind of exist in it? So like hosted Lightning wallets, things like Zeus, maybe LSPs. Like, let's just kind of set the stage for the audience here.
Sure, let's do it. So Bitcoin has a few problems with it, right? You need to wait for a block to get confirmed, and that takes about 10 minutes. To get into a block, there's limited block space, so it's very competitive to get into it. That can mean that making a transaction when you need it could be very costly. So Lightning is sort of a layer 2 solution on top of Bitcoin that attempts to solve those problems. It uses these things called payment channels, which you set up between other counterparties. And you basically stake your Bitcoin into these channels in advance before you can use them on Lightning. And, Lightning sort of uses this hub and spoke model where you can make a payment by hopping across multiple channels. And if you happen to be in the middle of a payment, you can earn some routing fees on it. So you've got all of these interesting dynamics as far as routing and liquidity, a lot of interesting challenges about how we get new users, those channels, and how do we introduce those concepts to them. Lightning's been around for 4 years now, maybe longer, 5. And we're seeing some pretty great growth. I'd say the last 2 years has been incredible. You want to dive into the different types of wallets people could have?
Yeah, one thing I would just want to clarify.
Array, and there's a lot of nuance to it.
Yeah, I mean, one thing I just want to clarify is, with Bitcoin is optimized for, as you said, like kind of final settlement and, of course, decentralization, all these other things. And as part of that, by design, it takes that, at a minimum sort of 10 minutes for each block to be confirmed. And, if you're listening, you can go and look at, something like mempool.space, and you can actually see what, Bitcoin block, as they come in and as they are, confirmed by miners in the network, you can see all the transactions that go into each block. And then Lightning, to your point, it sits on top of layer 1 Bitcoin. It's a layer 2 technology, and it
Correct.
aims to make certain trade-offs. So it's it requires a little bit more trust because, as you said, you have to open these Lightning channels to other entities, but you get sort of essentially instantaneous payments for very, very low fees that anchor to layer 1 Bitcoin. And so they sort of get the benefits of Bitcoin. And for these minor trade-offs, you get this huge benefit of very fast payments for very low fees over Lightning. Is that?
Yeah, absolutely. I think describing Bitcoin layer 1 as the settlement layer and Lightning as the payment layer, the payment rails in which you want to do your daily payments on, I'd say that's accurate. And yeah, there are definitely a lot of trade-offs when using Lightning. I think the most distinct one, other than having to put up the capital is this really interesting problem that sort of applies to how all these different wallets are set up. It's this requirement that you have to be online like all the time, or at least have some other counterparty like a watchtower or a lightning service provider online for you all the time to make sure that your counterparties are not trying to cheat you and run away with your side of the channel funds. So yeah, we make these trade-offs, and as a result, we have some really interesting approaches as to how to get these this application into users' hands. So I'd say the most common, unfortunately, are these sort of custodial Lightning wallets. And this is like, I'd say a wallet of Satoshi, perhaps, if you guys have used that. Blue Wallet, at least their default Lightning wallet. They're both custodial solutions, which are it's good for users in that it's easy to get set up. You're not worrying about channel management, but you could get rugged. Not saying that these entities would do that, but there's a possibility that Blue Wallet turns off their server, runs away with your sats. Wallet of Satoshi runs away with your sats. That re-authentication risk isn't great.
And when you say custodial, what you mean is that we're actually taking a step further back. The way the Lightning Network works, as you mentioned, this hub and spoke model is you have nodes, and anyone can run a node on top of Bitcoin Core. And there's lots of different there's what are some of there's Umbrel, of course. There's Nodl, there's Minode, there's all these sort of pre-built systems, or these systems that make it way easier to run a Lightning node alongside Bitcoin Core. And but in order to do that, you have this Lightning node, as you said, that has to be online all the time in order to maintain these payment channels with other nodes. And you have this giant spider web that basically allows you to sort of route payments through the network. And so, as you said, having to have a node online all the time is impractical for some people. And so there's this, custodial solutions where basically they are running a node for you and you're trusting them to basically make you whole and to keep track of everything for you. Is that pretty good explanation?
I would say slight nuance to it. In the case of Wallet of Satoshi, Blue Wallet, you're all really just sharing the same single one Lightning node, and then they put a piece of software on top of it that just keeps track of everyone's different balances. I think the same could be said a little bit for Moon, in that you're using their Lightning node to get swaps, but you sort of control the funds, so it's a little different. We'll get into Moon in a little bit.
Yeah. So when we're talking about Moon, Wallet of Satoshi, Blue Wallet, these are apps that you can go download on your phone right now in order to interact with the Lightning Network and send Bitcoin, again, essentially instantaneously for very low fees. So you can go do that right now. But as you're saying, those would technically be,
to use. Moon,
our producer just reminded us. Yeah, Moon, MUUN, not just MOON. Those are technically considered LSPs, right? Lightning Service Providers.
Okay, so I'd say all three of those are LSPs in a certain way. Definitely with Blue Wallet and Wallet of Satoshi being custodial driven. Moon's got a bit of a different security model. We'll get into that a little later. But yeah, so I'd say these are instances in which you're relying on someone else's Lightning node. But then you could go a step up and say, hey, you know what? I want to be a little bit more sovereign. I want to run the node myself on my phone. I might not have my Raspberry Pi. This one here is running some old Nodl software. This one's served me very well. Super easy setup. But some people don't want to spend, or they don't have the money to set up their own Raspberry Pi. They don't want to run it at home. They don't want to worry about the maintenance, and they want a quick solution. So there's a couple other wallets in this category. I would say is Breeze and Phoenix, which are both they're wallets in which you're running your node on your phone, but you're really relying on the LSPs that Async is running for Phoenix and Breeze is running for their users. Breeze has a little more flexibility in that you could use the command line in like the dev settings to open your own channels, whereas Phoenix just only lets you set up channels, with them. And basically, the LSP says, okay, we're listening out for when you want to make a payment or when you want to receive a payment, and we know what channels you have available to you. If your channels aren't sufficient for sending or receiving a payment, we're going to automatically open this channel up for you or give you a prompt, and we'll, in most cases, show you what the fee is. If it's acceptable to you, we'll open that channel. You'll be able to process that payment. So this LSP is sort of doing some of the heavy lifting for a user that, might not have a view of the whole network on their phone, or, it might not be easy to get them payments otherwise. So these LSPs, they act as sort of a middleman that helps facilitate this process while users still get control of their own keys, which is super refreshing. There's a little bit of a trade-off in that a lot of the way these LSPs are working, they essentially know like all the transactions you're making, especially if your channels are only open to them. So there's a privacy trade-off there, and that people should be aware of. Obviously, over time, some novel solutions can come up. A lot of people are working on some, blinded payment sort of stuff, but this hasn't really come to fruition. So when you're really using an LSP exclusively, especially, and you don't have the option to go other paths, there's really a lot of privacy trade-offs there.
Yeah, you're trusting them with all your information.
Mm-hmm.
Can you guys talk a little bit about like the different sort of layers of privacy, especially as it comes to the Lightning Network? Because it's not just as simple as spinning up your own node or hosting your own sort of Lightning node, or at least to my understanding, if you guys don't mind just kind of exploring that a little bit.
Yeah, sure thing. So there's tons of layers of privacy that you have to think about on Lightning. Unfortunately, it's a little loaded right now. I would say, generally speaking, as rule of thumb, when you are sending on Lightning, you have a really high degree of privacy. You're going through typically a few hops before you reach your destination, and whoever's receiving it only sees the last hop in that chain, right? So they could say, okay, I got this amount. It came from this hop, but I don't necessarily know if that hop was the payer or if someone before that made the payment. So you got some really nice privacy degrees there, privacy guarantees there. From a receiver, as it stands right now, you're sort of doxing your node. Every invoice in a Bolt 11, which is now the standard invoice format, has your public key encoded into it. So if you're sending someone an invoice on Lightning, unfortunately, you're revealing who you are, or whose node you're using to receive the payment. This is something that's going to be fixed, I'd say, pretty soon with this concept called blinded routes. It can make payment reliability a little more shaky. It could also be a little more expensive, but these are trade-offs you're going to have to make to get a little more privacy on Lightning. But yeah, there's definitely a whole lot of different layers to it. So there's the network layer, in which you are broadcasting all this gossip to the Lightning Network, to all your peers. You're saying, hey, I have these channels with these capacities. If you want to, perhaps use me in a hop to make a payment, here's the info you need to do it. So, it's going to be sort of difficult to transition away from all this information we're broadcasting, but over time, hopefully we'll be broadcasting less and less of that data. But on the Lightning Network layer, that's one thing to think about. After that, when you are closing a channel, I believe, on the blockchain, you sort of reveal that, you were in this Lightning channel. And, it's sort of unavoidable at the moment. However, as we transition over to these PTLCs instead of HTLCs that Lightning uses to, make these micropayments, we're gonna attain a little more privacy there. We're gonna be using, and especially in our broadcast, these things called SCIDs, which are these aliases that we're gonna use, and that's gonna give us a little more privacy too. So far, a whole lot to unpack. So we got, Lightning Network layer. We have the Bitcoin network layer on the blockchain. All the records there. And furthermore, you also, to a certain extent, have to think about higher level attackers, how you're connecting to your node, and everything that gets revealed like that. So, not as much of a threat, but there's definitely a lot of things to take into consideration.
So P still hasn't figured out how to unmute himself. So I'm going to take one of the questions from the chat real quick. From Joshua, is it profitable to run a channel for public use?
Profitable to run a channel. I wouldn't say so. If you want to run Lightning and make a profit on it, you have to be a routing node, right? And you're essentially trying to be a middleman in those transactions that we're talking about. Essentially, your goal is to route as many payments as possible, collect as many sats as possible. And you're not going to be able to do that with a single channel. So you want to be facilitating these payments by setting up channels to multiple peers. You want to make sure the flows make sense there. So in a lot of cases, you're going to be wanting to rebalance a channel depending on the economic flows. If you're really lucky, you could find a balance where a channel is going both ways, so it balances. But that's much easier said than done. And we also are dealing with an incredibly competitive fee market. So there's people who are willing to put up tens of thousands of dollars of capital and only make a couple dollars back on these transactions. So yeah, I would say it is very difficult to do profitably, but it is possible. And there's people who are making thousands, I'd surmise tens of thousands of dollars worth of Satoshis on the network every month. But those are the people who are really locked in. They're actively managing their node, multiple times a day. It's difficult for sure. I think things are going to become easier as we bring more people onto the network. And I think stuff like Taro, which is, issuing assets through Taproot scripts on Bitcoin, they could also be brought to the Lightning Network. That's going to bring a lot more traffic, a lot more routing to the network. I think it could be easier to become a router over time as our network grows. So, yeah, it's definitely doable, but it's definitely a rabbit hole. You can easily lose a lot of sats. It's going to take some time to learn the nuances, to establish yourself, to build that reputation, but you can totally make a profit on Lightning.
And I want to just reiterate, we're talking about sort of the nuts and bolts of the Lightning Network, right? You can interact with the Lightning Network, use the Lightning Network right now today, just by using one of these apps that we're talking about on your phone, Moon, that's MUUN, things like that. And you don't have to understand any of the complexity that we're talking about. So we're really going into the deep nuts and bolts of this. And
that's power user stuff, right?
Exactly.
Like, this can take some dedication. You're going to really be diving to the weeds. It's going to probably be a months long, if not years long process. And these routing nodes, you got to have high availability. You got to be online all the time. You probably want to have it hosted somewhere with like a good line and not just be on Tor behind your, firewall, although you can still be profitable like that. It's just much more difficult. And, you're not going to be a routing node when you're using like Breeze, Moon, any of these other solutions, right? It just, your phone's not going to be online all the time. Otherwise, you'd be burning, all your battery, and you just don't have the same connectivity.
Well, first thing first, I hate to be the bearer of bad news, Evan, but my phone is on 24/7. So this is awkward. Because you are on my show and I have a stupid question and I have no shame, I'm going to ask said stupid question.
Let's do it.
All right. Strike. My understanding is they are also allowing me to buy Bitcoin on the Lightning Network. How is that interaction? Like, can we break that interaction down? Because like, I'll be out, like, I've not put a single sat in my Moon wallet for my Lightning. So like, explain to me how I'm interacting on the Lightning Network by just purchasing Bitcoin on Strike. I'm sorry I hijacked the conversation, P.
No worries. So Strike is a really cool app for, either buying Bitcoin. You can use either on chain or on Lightning. It's also a great way for people, especially in jurisdictions like the United States, where selling Bitcoin is a taxable event, to pay Bitcoin invoices using your fiat bank account. So Strike essentially has all these relationships, setting up with banking partners, different exchanges, it seems like. And basically you get connected with, I think it's the Plaid network, right? You'll log into your bank account, get that set up, you'll deposit your dollars, and then you're ready to make your purchase out, right? You got your balance in Strike. You'll give it an invoice from Moon or whatever wallet you're using. Strike will figure out what the US dollar conversion rate is for the Bitcoin for whatever the amount is in that invoice. So it'll give you the rate, how much they deduct from your fiat balance. And once you prove it, they deduct those dollars from your account. And with one of their very many Lightning nodes, they'll pay that invoice for you. So it's really novel service. I'm a bit of a user. I've used Strike a bunch. And yeah, it's definitely a custodial solution, definitely KYC'd, not ideal for a lot of people. But for people who are willing to KYC, it's a pretty solid product.
One of the things that I think is so interesting and important about services like Strike is that instead of it sort of being like, we want to build a thing that sort of shoehorns Bitcoin into it, Strike is utilizing the existing Lightning network and Bitcoin in order to provide a service that is needed by customers around the world. And I think that's a really interesting aspect of what they're doing. You can interact with Bitcoin in the Lightning Network, but their primary use case, the reason that app is successful and interesting, is because it is providing this functionality that is very difficult to achieve in another way with a different service.
Yeah, absolutely. I mean, Strike put themselves in a great position, took advantage of this great opportunity. I think they're going to see some more competition, not only with other competing apps, but with how Taro is going to work. I think it's going to be interesting to see the dynamics of that, see how that works, see if they take advantage of Taro assets instead of solely depending on these fiat banking relationships. But yeah, hats off to them. It's a super smooth experience. And for someone who doesn't even want to worry about getting that Lightning wallet in the first place, super novel way to use that Lightning network for payments, but still use dollars as your unit, or whatever other fiat currency you got plugged in there as your unit of account. So yeah, it's brilliant.
And can you just define what Taro is for our listeners? Like, obviously it's a would you call Taro a protocol?
Yeah, I would say it's a protocol for issuing assets through these Taproot scripts, which we've somewhat recently introduced to Bitcoin with our soft fork. And essentially, you're going to be able to issue assets on it. Obviously, you or I can issue something ourselves, like Pcoin, and obviously people can issue all sorts of nonsense on it, but there are going to be big issuers that come and use it and provide people with both stable coins of big fiat currencies, but as well as sort of community currency tokens. And yeah, it's been pretty cool to see things behind the scenes be developed. I think we're going to see a lot of cool opportunities where these different assets get converted on the fly to make these payments. Yeah, I'm just super excited for people to get their hands on it later this year, and it hopefully to go live on Lightning very soon. So fingers crossed.
One question I've heard two different things. Does one have to open a channel that is specific to the asset, or can Taro leverage existing Lightning channels in order to transfer assets?
That's a fantastic question, actually. And the answer is that only the sender and the receiver need to have the asset-specific channels open. But in the middle, all the hops in between, they can just be regular Bitcoin channels. So conversion will sort of happen at the beginning and the end, or wherever you're hopping over to those Bitcoin channels.
Oh, wow. So you could basically, there could be like a singular node that is like for the specific asset. And then as long as you or multiple nodes, let's say, and as long as you had a channel for that specific asset to that node, and then the other person did, you're saying it can just hop through the network as usual using the existing Lightning
yeah,
network.
absolutely. And that's why I'm saying that this can drive like a great amount of routing once this is released. You can be processing US dollar payments, euro payments, you name it, not even know it, and be like collecting revenue and sats on it. That rocks. So
That's super interesting.
Super bullish on routing moving forward. I think that the difficulty of turning a profit is going to come down lower because of that.
That's so interesting. And what I was trying to share earlier before I fucked up my mic and nobody could hear me, which I do at least once a show, is I just wanted to give a graphical representation of the Lightning Network. So this is a fantastic website that's lightningrouter.app. It's lightningrouter.app. And I actually filtered this so that it's only showing nodes in the Lightning Network that have 5 channels open or greater. So I'm filtering out a huge number of nodes, but you can see it's this gigantic spider web of these nodes that are running Bitcoin Core, and then they're running a specific implementation of the Lightning Network. And there's let's say 3 very popular ones. There's LND, CLN, and then Eclair, right? And there's a few other ones that are coming out, but anyway, so this is basically all the connections that a friend of mine's node, Darth node, has throughout the entire Lightning Network. And so basically, if Evan's running a node and I'm running a node and Q is running a node, and I want to send, and let's say like I have a channel with Q and Q has a channel with Evan, then I can send payments to Evan through Q's node, and he collects a nominal fee for that service. But it gets really interesting when you're talking about the entire network, because as you can see, if this is the Darth node, this person can send payments to almost pretty much the entire network by just bouncing through all like the other nodes in order to get the payment to a specific node wherever it is. So it's a pretty powerful way to send payments and other assets we're talking about, and information, and there's a lot you can do with it.
Absolutely. And we're really just getting started. There's still a lot more left to do to formalize in the protocol. There's still a lot we need to do in terms of privacy. I would really love for us to be able to buckle down and iron that out so users have better assurances. A lot of stuff coming down the pipe has me very bullish on Lightning privacy moving forward. I think we're going to have some great guarantees for our receivers as well very soon.
Yeah. And to reiterate, you were saying earlier that when you're interacting with the Lightning Network, senders have a significant degree of privacy. But if you are receiving payments, you have to basically, at the end of the day, kind of give up your pub key, and that is a privacy issue. And so, there's, as I understand it, there's basically 3 main technologies that are kind of being explored. There's rendezvous routing, trampoline routing, and route blinding. Is that accurate?
Yeah, those are definitely the main 3 that are being explored. They all come with some slightly different trade-offs. Essentially when you're getting this privacy on Lightning through this routing model, you're making some sort of trade-off to get it. So you're either paying more, either saying, oh, I want to go through more hops or obfuscate and pay for this bigger onion we got to go through. Also, paying more for them, and also the payment reliability. So if you're going to be using these methods and they become formalized, your payment reliability is going to be a little trickier. It's just another trade-off we're going to make along the way. But as far as the proposals, I think that trampoline routing is super interesting.
And can you describe what each of those is and sort of how they provide additional privacy?
Okay, I'll try. I will try my best here. So
at a super high level,
So essentially, a rendezvous is where you say, okay, let's meet in the middle. We'll rendezvous at this node point, and this node point is going to be able to bridge the gap between us. Hence the word rendezvous. Trampoline is really where you're saying, okay, we're going to take this payment and defer it to this party. We're going to get to that party, and that party is going to make the trampoline leap to wherever we want to go. And in the process, the receiver is going to be obfuscated. And blinded paths is a little more tricky. Essentially, you add this thing called a tweak to the last few parts of the onion, the last few parts, and only the last few hops or the people there are able to figure out what that tweak is with relative ease to make that payment. So the payer is not going to be able to figure out where exactly it's going. So I believe blinded paths are what we're going to see. I think that's sort of the consensus of what the best sort of way to go is. And I believe we've got an implementation over
Bolt 12. No?
It's okay. So that's a whole other can of worms with Bolt 12. So Bolt 12 is sort of this sort of all-encompassing spec, and it does a lot of things. So the main thing is recurring payments. So Bolt 12 invoices could be really good for subscriptions and things like that. There's also part of the proposal that's probably the most controversial part is the onion messaging, where users are able to send each other arbitrary bits of data. And there's a bit of a debate about whether, we should just let our nodes transfer that data over freely to facilitate, all these interactions on the Lightning Network. Or if we should sort of charge for those interactions now that we have Satoshis, millisatoshis, why should we allow freeloaders? So I'm leaning a little more towards the latter on that, but very interesting to see that played out. And then there's also the third major part of Bolt 12, I would say, in the blinded routes proposal. But technically, that blinded routes part can be ripped out and actually applied to Bolt 11. So, there's a lot of stuff to be hashed out there. I think there's going to be a little bit of a divergence of the ways the different implementations go. But essentially, I think we can see blinded paths on both Bolt 11 and Bolt 12.
Got it. So one question that had come up much earlier in the conversation, but was like, is it safe to put one's funds on something like Umbrel in order to interact with the Lightning Network? And I have my answer, but I'm curious what you would say, Evan.
So, you obviously have all these different security models. You have this hot wallet. You have to be online all the time. I have a high degree of assurance of the funds on my node are going to be recoverable, but I'd also do like really thorough backups, managing the time locks on my channels. I have another node I could restore my stuff to. So there's a lot of different nuances. Generally speaking, I would say, yeah, it is safe. But on the other hand, I would say don't put your life savings on a Lightning node. Think of it like your checking account, right? You want to have your savings in cold storage, probably on seed plates, maybe in multi-sig if you're so inclined. On Lightning, I still wouldn't put more on my node than I'm willing to lose, right? But at the same time, similar to restoring a seed, like when you want to test your cold storage setup, I would probably test my Lightning backup setup at some point early on. Make sure that you can recover the keys, restore your sort of hot wallet there, and also be able to issue your channel backup. Now, one thing to note with your static channel backup, when you plug that in and recover it, you don't just get all your channels back. Essentially, this was my channel state. I'm broadcasting. I want to collect all my funds back. So essentially, what you're doing is saying, I'm closing all my channels out, bring them all into my hot wallet. And, depending on that state of your counterparties, whether they're online or not, whether they want to cooperate or not, they might close out in the next few blocks, or you have to wait for the time lock for the channel to close. But
I went through that.
That time lock is super important, though,
Yeah.
because if you get hacked, if someone tries to rug you, that's the period of time you have to call shenanigans on that theft and get all your funds back. So it's a very important component of the system.
Yeah, and again, just for the audience, I know I said this already, but we're talking about the nitty-gritty nuts and bolts aspects of the Lightning Network. You don't have to understand this in order to participate in the Lightning Network with an app like Moon, MUN, or Blue Wallet, or something like that. So Just want to be clear about that. But
Well,
yeah,
let's bring it back in, right? So I didn't even get a chance to plug Zeus here. So
fuck. All right.
let's run it back. Okay, so we have, I'd say, 4 categories of apps. I'd say we have Wallet of Satoshi and Blue Wallet in that fully custodial bin. I would say Moon is another step up from that, in which it's non-custodial, but you're sort of depending on them for their swaps. You know, Moon, super great wallet, good option. Still, any place you're really holding your own keys, you can't go too wrong. But be mindful of the privacy implications. Then there's apps in which you're running your own node on your phone. You got Phoenix by Async. You got Breeze. You got stuff like Blixt, the very cool wallet as well. And then you have our last category, sort of remote connection. Zeus would fit in this category. Stuff like Zap would also fit in this category. And basically, you're connecting to your Lightning node. It could be anywhere in the world. It could be in a data center. It could be at home behind your router on tour. And Zeus strives to give you as much control, as much privacy as possible. So you go on there, you can manage your on-chain funds, just do regular Bitcoin transactions or do Lightning. You can manage your channels. You can get into the nitty-gritty, control all the different fees for your channels. You can see how much you earned. I go on my Zeus app every morning. I see how many sats I routed, how much I earned for the last day, and I can make adjustments as I need. So I'd say that those are really the 4 main categories of Lightning wallets right now. Obviously, you don't have to come out the gate and be a hardcore Zeus user with your own node, your own umbrella. But I think the tooling is there. With a little bit of time and setup, you can be what I would consider like a fully self-sovereign user on the Lightning network. With as minimal trust on third parties as possible.
Yeah, and I can't speak highly enough of Zeus. I was one of the, creators of PlebNet. A bunch of us, like 20 of us, got together and basically were like, we want to learn about Lightning. Like, we're fucking reckless. And, just dove in, and it's grown into this, large community. So I would recommend, if you want to learn about the Lightning Network and you want a lot of support from people who can answer questions, PlebNet, which you can go to at plebnet.org, which will take you to the Telegram channel. Great place to start. There's a ton of resources out there. BTC Sessions has some great ones. There's fantastic stuff. But what Zeus is the wallet that I personally use when I am away from my node and I want to basically be able to maintain it and, as you said, track on all the details, make changes. Zeus is fantastic. And there's not, I don't think there's really anything else like it out there, even now. Is there?
I have a lot of respect for Zap and what they've done. I've actually contributed to their desktop app a little bit, but it's really not super actively maintained. I believe, there may have been an update in February or something. But Zeus, we're hacking on pretty much every month, if not every week, putting some updates up. It's a full free open source project. We've got about 25 contributors, code contributors, that is. We've got like 70 plus translators, tons of people involved. It's been really awesome. It's really my first free open source project, and I really just made it to scratch my own itch to give myself a way to access my Lightning node. I set up my Raspberry Pi like 3.5 years ago. I was taking the bus into the city every day for my cybersecurity job. And I'm like, wow, this is really awesome that I have, my Lightning node and I'm ready to make these in-person payments, these Lightning Fast payments for cheap. But where am I going to do that? I want to do that from my phone. So I just sort of put it together, and now we've got like a really big user base, a lot of contributors, a lot of people in the space that I looked up to. Like Sticks from Trezor, he's contributing code to Zeus now. It's sort of surreal. I'm going to keep on doing it. There's definitely some challenges, but I believe wholeheartedly in Lightning. I think it's going to surpass all the existing payment rails in one way or another over the next 10 years. And Zeus is here to be a part of it.
Hell yeah. Yeah, if you are running your own node and you're interacting with the Lightning Network, do yourself a favor, download Zeus and start playing around with it. It works fantastically. Is Zeus available only on Android or is it also on iOS?
No, we are actually on iOS too. So
Amazing.
it doesn't matter if you have an Android or an iOS phone. Maybe
Good
down
to
the
go.
line we'll get onto those Linux phones as people are using them more. But for now, those are two platforms. And the real kicker is that we have Tor built into both versions of the apps. So if you've got an Umbrella at home or MyNode, Raspberry Blitz, whatever, your phone is going to be able to connect to it remotely using Tor and get over your firewall. That being said, Tor's been a little finicky the last few weeks. I don't know
Yeah.
if everyone's been following that.
Can you summarize that actually? I know of it, but I have not been following it super closely. What happened there? What's going on?
Okay, so basically, in a nutshell, we don't know, right?
Oh shit. Okay.
So, the main site is status.torproject.org, and you'll see the status of the network, what's happening. And we're seeing a degradation of the v3 onion services, which people typically use not only just to get their nodes onto the Lightning Network, so like talking to all the other nodes, but we also use that to connect our phones, like connect Zeus to your node. And basically, Tor has all these relays. People have to, run these nodes to like forward these packets of traffic. And basically, the demand for those packets is far outweighing the supply right now.
Interesting.
And you could speculate about what it is. Is it just general usage of Tor going up? Probably not. Is it competing darknet markets trying to flood the market and mess up their competitors' share and just cause shenanigans? Could be. That's a popular theory among some people.
You're saying it's definitely a state-sponsored attack. Got it.
Yeah, that's category number 3. Could be. We really don't know. Tor is complicated. We know that state actors use it to their advantage. It's also a thorn in the side of some authoritarian dictatorships where they don't want people accessing data on the web freely. Tor helps facilitate that. It could be a lot of different things. And we don't really have a great solution to solve this. The real solution is let's run more relays. Let's all go home. Let's go buy an AWS server or server at home and run our own Tor relay and fix that. But other than that, it's not really a great solution. So for Zeus users, this is a big problem, especially if you just want to use out the box with Tor. Fortunately, there's a lot of interesting alternatives. Certainly, there's a lot of trade-offs with them.
Wait, I just want to jump back for 1 second and
go for it.
Summarize what Tor is, and please correct me because I'm going to fuck it up. But Tor is basically it's essentially sponsored by the United States government, or at least its development was.
Yeah, it's the Naval Research Academy, something like that. Actually developed it, and I think there's a lot of funding for a lot of the servers too. So the dynamics are a little
weird,
funky there. Obviously, military and intelligence would have a lot of benefit of using it, but also you're letting this thing out into the wild. It's sort of like can't get the toothpaste back in the tube. So very interesting relationship to think about there. But, you also got to consider that, the military and universities, they helped develop the internet. The NSA also developed a lot of the cryptography that is used in Bitcoin itself. Things aren't so black and white. There's a lot of shades of gray.
It's all about the incentives.
Okay, I found an opportunity for me to chime in here.
Do it.
And Evan, come to my mother's basement now with me and put on our tinfoil hats. Bitcoin. With all these other things that you've brought up that are, deep state projects, where do you fall on the scale of Bitcoin is actually a government ploy?
Okay, well, this Satoshi fella was, definitely sketchy. I mean, who uses Windows as their main operating system? I think that's a big red flag. But honestly, even if it was, who cares? It doesn't matter. Tor was made by the government. Who cares? You could still use it for your own good. You could use it to subvert governments around the world. Similarly, you could use Bitcoin to subvert central banks around the world. So I don't care. If General Alexander from the NSA coded up Bitcoin, good on him. That's great. I'm still going to use it.
Interesting. Okay, I return it to you, P. Actually, I got one more.
Okay,
While we're down in my mother's basement with our tinfoil hats on, marry, fuck, kill Janet Yellen, Christine Lagarde, Jerome Powell. And before you answer, there is a correct answer in response to this.
Oh man, you're really putting me in the hot seat right here.
I told you, come on down to my mother's basement with me, and this is what I lob you.
Okay, so probably. Ooh, this is so tough. Okay, I would say you got to marry Jerome Powell, right? Because he's probably got the most power out of them all right now. Use that to your advantage. Pump corn if you can. Damn. Now it's between
fucking tough questions
Lagarde and Yellen. Oh man, it's like that's a whole can of worms. I mean, Lagarde is probably more unethical because of her fraud charges. It's amazing that she's still so involved with the
I know it's
ECB.
fucking crazy,
insane. So probably kill her, but I don't want to fuck Janet Yellen. What kind of question?
It's too late. It's too late. It's already happening. You're doing it right now.
Man.
Wow, you answered so close. Though. Look, I mean,
yeah. Let's hear your logic behind this one.
It has to be. You have to marry Jerome Powell if for the only reason to be married to the money printer, and then like in the event of a divorce, half of infinity is still infinity. So infinite dollars.
Yeah, you're good to go. That's the most important piece of the puzzle.
And then at that point, it's really just like how big do you like your girls at that point, right? Jesus. I'm going to go back to being muted over here.
No, this is good. This is good. We need to keep the conversation dynamic, ask important questions.
Yeah, we said at the beginning of this, we're going all over the place.
Absolutely.
So wherever you guys want to take it, I'm game.
No, I love it. I love it. So, we've talked a lot about, the Lightning Network, Zeus Wallet. What are some other things that are happening right now in the Bitcoin space, whether on Lightning or just Bitcoin generally, that are particularly interesting to you, that you're excited about, or that you think are worth talking about?
Sure. So I think we hit on most of the things that I'm really pumped about in Lightning, right? We talked about blinded paths. We talked about taproot channels, PTLCs. We talked about skids. We talked about
did we? Skids?
Skids are like those identifiers for the channels instead of like saying like, oh, this is my channel.
Oh, got it. Okay.
Yeah, it's like an alias that you can use to sort of obfuscate who you actually are with your channel.
I'm going to be terrible. I just asked you a question and I'm going to like wrest it away into a different direction very, very quickly.
Wow, we're really going off the rails.
Oh, 100%.
This fucking guy. Trust him to run one interview and this is what
every
happens.
Fucking conversation that happens with me. So one thing we didn't actually talk about is why is privacy on the Lightning Network important? Why are you and I and so many people so interested in figuring out how to maintain anonymity for people that are receiving payments?
Sure. I think, the answer is why do we want, privacy on Bitcoin, on base layer? I think it's the same question. You don't want to go to CVS, make a payment, and then have someone follow you around and see where else you spend your money. That would really suck. On the receiving side, you don't want to have your employer paying you in Bitcoin and then them following you around and seeing where you spend your money either. Financial privacy is a human right. There's very sensitive things we do with our money, from, supporting our family, even as simple as giving your kid like $5 of allowance. Why would I want anyone to know about that? Like, that's only between me and my kid. But furthermore, you can be getting something to support your family that might be illegal in your jurisdiction. We don't want to be, contributing to the already existing and steadfast panopticon that we've set up in the financial world with, all our card payment systems, credit scores. We do not want to recreate the existing financial system that Satoshi essentially wanted to destroy. So I think privacy is a big part of it. And we've got this really interesting paradox in that Bitcoin is this open ledger, but we need that in order to verify the supply. Because, the real issue that Satoshi's trying to solve is, the money press, like how it gets issued. And having transparency on that is critical. But at the same time, the average person should not have their finances exposed to the world. So it's a very difficult challenge to tackle, but we've got some great minds working on it, both on layer 1 and layer 2. And, there's definitely a lot more challenges to solve, but I'm optimistic. People who are working on it are some of the greatest minds on the planet.
I want to give you a magic wand and just if you can change something immediately right now about the Lightning Network, the way it's used or interacted with, what would you change?
That is a great question. First and foremost, I just want more people using it. More exchanges, more services, more merchants. That's super important. But really, if we could, I would do away with the first category of apps, those custodial apps, and push people over to at least bucket number 2. I'm not saying everyone should be a Zeus user, but any opportunity for you to take control of your own keys, which is, another huge part of Bitcoin, that personal responsibility, being the one in charge, that's huge. So I'd probably wave my wand and say, goodbye, wallet of Satoshi, Blue Wallet, your LND Hub servers are off.
Oh shit! Shots fired.
You got to use, Blue Wallet's doing a nice job in that they've added I think it's tucked away. I haven't used it in a few months, but they've actually taken the Rust Lightning library and put it into their app, so you could sort of run your own node in Blue Wallet now. So
that is fucking cool. I did not know.
It's really cool. I really love that team and all the stuff you could do with that wallet, and really cool to see them sort of moving into that direction. Obviously, there's a lot of challenges there when you give a user their own node. They have to be introduced to, the concept of channels. They got to be able to have someone open a channel to them to receive payments, LSPs, whole can of worms. A lot of stuff we have to figure out over the next couple of years. But, at least they took the right step in that direction.
I wanna get your sense, and I am a firm believer of the 80-20 principle, and that of 100% of users, 20% of them will actually really understand what's going on. Like right now, you ask 100 people on the street, I don't even think 10 people can actually tell you what's happening when they press or turn the ignition on their car or flip on a light bulb. At a certain point, do you feel like there needs to be at least product offerings for that, quite frankly, what will end up being the majority class of users? Or do you think it's a necessity for people to actually really roll their sleeves up and learn this? And if they're not willing, then this is just not a product offering that they're going to use.
So this is it's a great question, right? I think there's a lot of complexity in it because I think, the 80-20 rule holds true, even with Bitcoin users, right? But Bitcoin also has in its ethos this, sense of personal responsibility, this DIY attitude. So yeah, we personally should be encouraging people to pull up their sleeves as much as possible, get their hands dirty if they can. But that's not going to be the case for like my parents, like my mom is not going to learn the Linux command line. So we need to make some trade-offs to make these things easier for people. LSPs have a big role to play in getting people this liquidity so that they're well connected. I think we just need to make sure that general Bitcoin usage is done not only in a self-sovereign manner in which you're holding your own keys, but we need to do, everything we can do, everything possible so that these LSPs that we're interacting with know as little about us as possible. So, yeah, we do need to dumb it down. And this is sort of why I want to sort of focus on a second app in the coming year. I think Zeus is great for people who are willing to get their pies set up or, run L&D on their own computer and do all the nitty gritty. But, we also need to make accommodations for, let's say, my mom, right? So, in the next year, I'd say Zeus is going to release a second sister app. It's going to have a lot of similar functionality, but this second app is going to have the node and wallet built in. And hopefully we can ship with some LSP services to do some of that heavy lifting as far as the channels and connectivity go.
Love it. Okay. I'm going to take us back to the original question before I so rudely wrested the conversation in a different direction. What are you excited about in the larger Bitcoin space?
Oh, man. There's a whole lot. I'd say primarily just in general adoption around the world. All these towns, countries thinking about it. Even the Russians talking about or teasing the idea of accepting cryptocurrency for payments. That stuff is super exciting. As far as development goes, I'm really pumped about stuff like Stratum V2. People just being able to, get around mining censorship, I think is super critical. And I'm also intrigued, although, I do have some concerns about it. I'm really intrigued about Fedimint, which is this sort of community-run custodial solutions, like a federated community solution that I think is actually going to give people a lot of privacy, give people a place to just dump their coins and get a whole new fresh set out without the federation knowing. There's going to be a big trade-off in the system, though, and that is custodial. You can get rugged. However, the federated model is sort of like what Liquid uses. You got some more assurances. So definitely intrigued by that project as well. Other than that, just really interested about how we can also add privacy in terms of Lightning coming from L1. Just trying to obfuscate our on-chain footprint further. I got my friend Ben the Carmen. He is working on a CoinJoin solution for Lightning nodes. It's called LN Vortex.
No shit.
It's a pretty cool solution.
Wait, you got to define CoinJoin for the.
Okay, so CoinJoin is a way of doing a collaborative spend with a group of people. You all put Bitcoin into this pot. And a lot of the implementations, you're putting like the same denomination, but others do it a little differently. And basically, you put all your Bitcoin into this pot and then spit it back out to yourselves. It's sort of obfuscate which coins came from where. And you're essentially giving yourself a higher anonymity set. You could say, okay, let's say us three put our coins into a CoinJoin, right? And we get them spit back out to us. When we go and spend our coins, it's not really clear where those coins came from. It could be either one of us. And as you keep doing more and more of these CoinJoins and you do one round after another, your anonymity set goes up. The coins that are being spent could have been from increasingly more people. So CoinJoins are essentially a privacy technique for layer one.
Q, do you feel like you deeply understand and can explain back to your own mother or grandma what a CoinJoin is?
Fuck no. Kidding me? I could barely explain the Lightning Network right now. Like I'm sitting here just in like class. Don't fucking give me a pop quiz in the middle of it. Those are the
I'm
worst
making a note
teachers.
here. I'm making a note here. F. I think that was a
These
great
get
explanation,
degrees.
So, yeah, I mean, obviously, there's going to be some people who are just never going to understand some of the concepts. But what we can do as application developers specifically.
Hey, don't insult my co-host.
I get it. I'm not technical. You guys are much smarter than me, but like I
wouldn't go that far. I wouldn't go that far. I still can't figure out how to fucking unmute myself. So, take that, make of that what you will.
It's all right. Listen, guys. Even me, don't put me up on a pedestal. I'm still learning stuff each and every day.
That was the most milquetoast. Like, hey, you guys are cool too. You were like, look, like just the other day, I learned how to farm tomatoes. And that's the same thing as like running a Lightning Network node, like being a contributor to Bitcoin Core, whatever.
Evan's that guy who will be like, dude, I'm the same as you, man. Like I'm still learning. I'm learning complex trigonometry for breakfast and meanwhile coding new software just like on my lunch break. But we're the same. We're the exact same.
But I'll take it. I'll take it.
Yeah, I'll definitely take it too. Flattered. But
so tell me more about your journey to software engineering. I was a software engineer myself. I helped build some of the early coding boot camps. So I don't write much code these days, but I'm really curious. I came to software engineering much later in my life, and I'm always fascinated by people who had the focus and the interest to start playing with these technologies much earlier. So how did that happen for you, and how did that translate into Bitcoin for you?
Sure. So I don't know. I think computer and the internet was like really intriguing to me as a communications tool and as like this tool for accessing media. Like some of my like earliest memories, I guess not earliest, but like 5 or 6 years old. Just remember my dad getting a computer, getting set up with like AOL disk or something that you'd get in the mail. Like kids back in the day, when you wanted to connect to the internet, your computer would yell at you and make like all these screeching robot noises. So anyway, we did that, and there's some platform on AOL, and we were just downloading the James Bond trailers for like, I don't know what was out at the time, like Tomorrow Never Dies, maybe. I think we downloaded the GoldenEye one too. And like it took like a day or two for like the 2-minute trailer to download at like less than 480p resolution, probably like half that.
And that was so much worse. It was so much worse than 480p.
It was awful, but just that experience was like, what? Like we picked our content, we set out to download it. So I think that really just like media in general, like I said, like I got into programming around the time I was 13. I was like, like a teenager, really into music. Also didn't have a lot of money, like couldn't just go to the store and get any DVD or CD I wanted. So like the piracy was like a really big part of it too. From there, like, I discovered all this great media, and I was downloading a bunch of stuff. I had like an MP3 blog. I set up with my friends on like Blogspot, and we would share like albums.
Oh my God, Blogspot.
Like that.
That's like GeoCities.
yeah.
It's a deep cut. It's a deep cut.
Yeah, it's like just one generation right after that, after the GeoCities stuff.
Did you just say GeoCities?
GeoCities, you could use that.
I'm totally going to. I'm going to steal that.
So after that, music blog sort of evolved into like a formal music blog. And we started like just writing reviews and started meeting people all over the world through different music forums, and we recruited up to the site. And I ran this like site throughout high school and college. Then we took a little break, and about 2 years ago we brought it back. So if anyone wants good music recommendations, still run that site casually. It's called beatsperminute.com.
I'm gonna really you're gonna whip out your Spotify right now. Give us what is the first song on shuffle for you?
Oh man!
First of all, say the website again, because I want to check this out.
So it's called Beats Per Minute, like the music term, like BPM. So beatsperminute.com, and from there is like I sort of hopped into web development, sort of out of necessity. Like the site looked bad, and I'm like, okay, the site shouldn't look bad. I want this to be a professional looking site. So we got into CSS, HTML, PHP for the WordPress backend stuff. And sort of kicked off my journey into web dev from there. But in school I was doing like Java stuff. That's it, Beats Per Minute. So we've got a whole lot of content. It's a lot of independent stuff. So, you're not going to find too much mainstream stuff, but we do cover like a lot of pop and K-pop stuff too. So highly recommend you guys check it out. First computer I'm seeing in the comments, we had like what was that? We had a compact. That was like the first one. Like we pulled up the James Bond trailers on. I think, unless it was Gateway, but there was a compact in the mix. I think that one's still at my parents' house somewhere. And then I got like this black Sony Vaio around the time I started up Beats Per Minute in middle school, high school. And that computer has like the sickest design on it. Like the edges of it are crazy, and had like a DVD burner too.
What? I remember when
It was like
Oh my
two of
God.
them. Like, so you had two drives. So on the top was like the DVD burner, and below that the CD drive. You know, they couldn't do both. You know, but
Do you remember when zip drives came out? Like iOmega zip drives? I remember being like
Oh, yeah.
100 megabytes. You could store an eternity of information on this one device. And it was this like weird little like thick, extra thick, like floppy disk kind of thing.
Yeah,
I thought it was
yeah. My
such hot
dad had a
shit.
couple of those.
I literally carried one around with me at elementary school. I guess it was
You
middle school.
would.
I totally did. And I was like, do you have any idea what the power that is contained within this device? People were like, you fucking nerd. And then I'd like kick them in the shins and whatever, and they go away. But yeah, man. Look, Q, while we're talking right now, Q is like, what the fuck is happening? I remember my dad having it was a portable laptop that was really a fucking briefcase that was like a computer inside of it. And you'd open it up and we had an external separate 28K modem. And it was like blazing fast because my dad was like a precious metals trader. So he was like, I need the fastest, most extreme. And Jesus Christ, when I think about that today, like that much computing power is like in the shittiest watch that you can buy today.
Yeah. Like our Raspberry Pis, you know, like these dinky little computers we're buying just to run all the time, like run circles around these machines. It's amazing.
Yeah. Okay, wait. New question. What is your favorite conspiracy theory?
Ooh, okay. So, you know, listen, I've entertained a lot down over the years, you know, like I still will go and laugh my ass off at an Alex Jones clip. Like
They're incredible.
learn tons of stuff through him. You know, he is hyperbolic, over the top, but, you know, got introduced to a lot of interesting concepts and ideas from him. So, you know, totally about it. But, you know, nowadays I'm really just like trying to have fun with it, see like where people go and try to figure out what's like the craziest idea you could entertain that's like stores within the realm of possibility. So like I've seen
So what is it?
like, really funny ones as of late. Well, hollow earth theory, you know. So
We were
you
just
guys
talking
know
about
that
that.
flat earth
Literally.
theory is just a cover to cover up hollow earth theory, right?
Oh shit. So I was saying earlier, I think that, you know, flat earth, supposedly the flat earth is surrounded by the ice wall, which, you know, keeps people from exiting and falling off the edge of the earth, right? People are like, well, why don't people just disappear? And it's like, bro, the fucking ice wall. Everybody knows about the ice wall.
Yeah,
So
ice wall theory's great.
right. Totally insane. So my next step is obviously we should be mining Bitcoin in the ice wall. It's an eternal wall of cooling that would allow us to just run ASICs overclocked all the time, good to go. So why aren't we doing that? Evan, please answer the question.
That's a great question. You know, probably our governments are stopping us to hide all the secrets of the world, I would say. You got to get permission explicitly to go visit Antarctica. Like, something's up there, right? So
Thank you.
So I don't know. Might be hard to get oil over there. I don't know if you got to drill through all the ice or to get any oil down there. But I think I was onto something today. Marty Bent was saying he went to like a mining facility that was next to a KFC, and then it struck me. I'm like, can we use canola oil? Can we use seed oils to power our ASICs? And apparently you can. So maybe we just got to work out a deal with some fast food joints and, you know, use that for mining. I mean, I've seen people in the past like take the canola oil from the fries and the burgers or whatever and put it into their car and just run off that. I'm not sure I'd do that with my car, but
high school. No,
Yeah.
there was like a club at my high school that used to like build out a new car engine to literally run on canola oil. It was the weirdest thing, but like
yeah, like you got to modify the engine, right? Otherwise, you're gonna be
yeah. Like I remember being like, yo, so like, how do you do this? Because I was trying to be like a little shithead at 14 years old to be like, yo, like if I can figure out how to just drive a car with canola oil from my mom's like kitchen, I'm good to go. Like unrealistic.
Like, kids are like
ambition.
sneaking into like their parents' liquor cabinets and like getting liquor, like putting water in there, and like you're watering down the canola oil.
No, I'm actually
I love
pretty
that
honest.
so much.
Did
Your
both.
parents are like, they're marking the line on the canola
Yeah,
oil.
yeah.
Like, this is a family resource. How fucking dare you? What are you doing with this? You getting high? And you're like, no, I just want to run my car.
Yeah, like, what are you cooking up with this?
Yeah. Crack cocaine, heroin. No, it's literally just you trying to drive to the ASIC farm where the ASICs hatch out of the eggs, the golden eggs, as we all know they do, and then
I'm
put
just
them into the
I'm just
miners.
trying to drive to Hollow Earth at this point.
Oh wait. So sorry. I once again, as usual, I derailed this. So, flat Earth is merely a conspiracy around the Hollow Earth. You were saying, Evan.
Oh, yeah, it's like a cover. It's like sort of red herring to throw people off the scent. If they all think it's flat, they won't think of how hollow it is. So I don't know. I also like to go down that rabbit hole, and I'm like, how much oil have we used? Is the Earth potentially hollow?
The answer is no. It's not hollow.
Yeah, definitely not. Like, honestly, if people think we're anywhere close to peak oil, like, I got a NFT of the Brooklyn Bridge to sell you. Like, honestly, how good do you think we are at putting?
I haven't heard that one yet.
That was the
but I
whole
love that.
hysteria like 15 years ago. It was like, oh, dude, this is it. We're milking these things dry, and then boom, we find like 3 more oil fields, and they're like, okay, we probably actually don't know how much oil is there, so we're good.
Yeah, it's like just never call the top, never call the bottom. Just like steer clear of this. And anyone trying to tell you like, this is the top, this is the bottom, or at this point all is over or whatever, just go about your day and ignore this. Like it's you just can't possibly know. And I think people like just generally have like these God complexes, people in authority too. Like, it's okay to say that you don't know, right?
No. Apparently, it's never okay. You cannot acknowledge that you may have made a mistake. At least in American politics and American business, it's always got to be just forward progress. Which way,
Jerome
Western
Powell, hang on. Admitting mistakes is not unheard of. We had both Janet Yellen and Jerome Powell say that they are, I'm paraphrasing here, incompetent buffoons who know nothing about what their job actually entails.
They did say that.
Like, that was the gist of it. But like,
100%.
hey, like,
Yeah, if you were
there's
to
no
read between the
accountability.
lines, yeah.
Like, did I take some creative liberties? And
Absolutely not. So, let's bring it all back to Bitcoin. We've talked about how obviously we need to mine Bitcoin in the ice wall around the flat Earth. We've talked about using canola oil and seed oils for their originally intended purpose, not human consumption, for lubricant and powering machines.
Don't do that to yourself.
That's right. Let's bring it back to Bitcoin. What do you think, or how would you define hyper-Bitcoinization? What does that term mean to you?
Hyper-Bitcoinization, in my eyes, means that you can interact with Bitcoin with ease without using any sort of third party to convert it for you or turn into gift card. You are able to use Bitcoin with comfort on a regular basis as both your unit of account and the medium of exchange. That's what it means for me. Not everyone is going to use it, but it's got to be ubiquitous in society. Some people are still going to be using their stable coins or community coins or whatever, but the Bitcoin holder is going to be able to expend it wherever they want because people in society are just going to know inherently, oh, I want Bitcoin. And this might seem like a super far-fetched idea, but I think within a generation, it has a really high chance of being a possibility. It's going to take like a whole new generation of kids that just grew up with it. Like their dad just gave them a little Bitcoin wallet to send them sats for their chores. Kids that are like, oh yeah, let me take the 5,000 Satoshis instead of the $1. Like, and they just come up and love it. And just, it's all they know. And, maybe they come out and have to interface with the legacy system around the way. And they're like, wow, setting up a bank account sucks. Doing a wire sucks. Writing a check for my landlord sucks. I wish this was all in Bitcoin, and I'm going to do as much as I can in Bitcoin. So it's going to happen. I think it's a little silly to think that just like it's going to happen overnight, or to think that everyone is going to use it as their de facto currency. I don't think fiat currencies are going anywhere anytime soon, at least. But yeah, to me, it's about that ease of use and just that ubiquity through society.
What is the thing that's going to be the biggest roadblock, in your opinion?
I think that we still haven't seen the full pushback that we're going to see from these institutions, these central banks, the state. I think that there's going to be some really serious clampdowns. I think some jurisdictions it's going to become illegal to have Bitcoin. I think there's going to be a lot of FUD from proof of work. Basically, the people in power have had this level of control for over 100 years, and they're not just going to let it go easily. So I think that's going to be huge. But there's also other challenges that we're going to face, that we are facing in terms of, UI and UX, people easily being able to interact with Bitcoin and interface with it. There's educational problems about like why Bitcoin is important. Although as inflation ramps up around the world and currencies collapse, I think, it's going to be easier for people to understand why Bitcoin. Like you don't have to tell an Argentinian like why they should be interested in an alternative money, right? Like they're getting crushed for decades and decades. But as that becomes more widespread, that's going to help too. And yeah, I think that covers it. But yeah, I definitely expect much more state crackdowns. Part of that's going to be hard to avoid. Some of that's going to be alleviated by jurisdictional arbitrage. Some people are going to welcome us with open arms. But the real fight, I don't think, has begun yet. I think, lastly, I would say this is a really big challenge, right? We have the risk of Bitcoin being completely co-opted by the institutions and just there only being these rails, whether it be it being made illegal to not have your Bitcoin registered or forcing everyone onto KYC ramps. There's a real risk of the governments just letting everything fly, but having everything under a microscope and having really strict restrictions on sovereign Bitcoin usage. Like, it wouldn't surprise me if some jurisdictions made it illegal to use Bitcoin like you can use it with Zeus. So we need to do everything we can to make sure that using Bitcoin in a self-custodial and non-KYC manner is as easy as possible.
Okay, back to conspiracy theories. Key, what you got?
Oh, I had one too that I wanted to bring up. Fuck. Hollow Earth. You guys are idiots. Flat Earth. You guys are complete fucking idiots. I was facing on where I was going with this. There was a genuine through line. Come back to me. Keep going down.
All right.
Keep going
Fair
down
enough.
this. Keep going down this rabbit hole, though.
All right. So one of the things we were talking about earlier is CBDCs and why central banking entities have started promoting them and making noises about promoting them. I'd love to hear your thoughts on that, Evan.
Yeah, sure. I mean, the institutions that really pull the strings, like, the central banks and IMF and certainly federal governments, want as much control as possible. I mean, a CBDC means complete financial surveillance. It's essentially going to mean a path towards a cashless society, a society in which I can't even pay my kid that $5 or whatever for mowing the lawn or doing his errands or chores. And that's simply not a world I want to live in. That sucks. So yeah, there's so much to gain. I think tools like being able to set, negative interest rates, like making your money like a rotting fish. Oh, you have this money, but you got to spend it in 2 weeks. Like, that's a super enticing tool for these people. The ability to surveil everything and just stop transactions that they don't want to. It's like, you're not a registered merchant. you can't accept payments. So good luck selling your tomatoes from your garden or whatever you want to sell. Like, that's a really powerful tool, a very dangerous tool. It's going to be used politically, I think, right? I think right now there's a lot of discussion regarding like gun violence and whatnot, and people are putting the clamps down on 3D printing and parts. Like, there's already been a lot of discussion there. A lot of discussion that's really driven by these governments. The payment processors, for the most part, just want to let them go through because they're making money. But the people in government, they stand to gain politically by their ban. I think we're seeing some corporations sort of leaning with them too, like sort of UPS is blocking delivery of parts. They say, hey, if you get a part and we find it, like, we're going to just confiscate it and destroy it. It's like, that's not right.
Wait, are you fucking kidding me?
Yeah, fuck UPS.
Wait. Can you be more specific? I did not know this. What
So
exactly?
UPS is saying, okay, we're sick of gun violence. So if you buy a 80% kit, gun parts, like, we're not gonna move any gun parts at all. And if you have an existing order, we might confiscate and destroy it. It's like,
are
what?
you fucking kidding me?
And I think this is partially driven by all this ESG nonsense where you got to be politically correct. You got to, make sure you're not associating with all these people. I think that's going to tie into it too. So
that is so problematic.
That's definitely problematic. So people, remember to vote with your wallets. Only use services that are looking out for your best interests. Be mindful of this stuff.
I had the slide in here as well. That's crazy, Evan. I did not know that about the gun parts. Did you guys hear about what happened with Texas? With the energy grids having issues, so a lot of the Bitcoin miners are shutting down, helping their grid. I don't know if you guys heard the flip. So like Nest, it's not Nest, but those like Bluetooth, Wi-Fi thermostats. One company, not Nest, but a company like that. Basically, the government set out a mandate that you're not allowed to use a certain level of energy for air conditioners. So they updated everyone's software. It set everyone's thermostats to 79 degrees, and there's no way to override it.
It's completely nonsense, like stuff that you have control of. So here's another news story. Just dropped today. BMW is charging you to use features in your car. If you want the heated seats that are already installed in your damn car that you paid maybe $100,000 for, you got to pay $18 a month to be able to use that functionality.
Are you fucking kidding me?
Fuck that. All right. I'm not.
That is such bullshit.
I do not. I don't want to be driving cars with proprietary software that block me off from features that I already paid for. Like, this is crazy behavior.
I mean, who pioneered that though is fucking Tesla. Tesla has the oh, you want this level of service? Well, then you got to pay for it, to get this. But that is fucking crazy. At least with Tesla, ostensibly, it's like AI based driving.
Well, not 100%, because there's one for like the supercharger, right? They're like, this will turn your acceleration. You'll be able to hit 60 in like half a second quicker.
Dude, all these companies.
Well, I think that's one time though, but still, that's still messed up. What's the point? To squeeze every cent? It's like really just an example of like predatory capitalism. Like I'm pretty anarchist, sort of ANCAP, right? But like when I see stuff like that, it just is despicable. Like, I'm never gonna buy your products, guys. Like, fuck off. I love Beamers. Like my grandpa and my dad own Beamers. After hearing this news, it's like, just fuck you and your company. This is my opinion.
I have one more.
Yeah, I mean, you don't own the car, right? You're just renting it. Even if
and that's like an extension of this globalist ideology that they're trying to carry out everywhere. You will own nothing and you'll be happy. It's like they're trying to perpetuate this idea. It's like, oh, you're gonna die anyway, so it's like you're renting anyway. So except for like if I'm the one renting, who owns it? It's like you guys and all your cronies. And you guys just want another revenue stream. This is the extension of that same ideology, and it's disgusting. We got to fight back.
I mean, I need to understand this more clearly. So are you saying that, like, there has to be a separator here? There has to be, like, if you own the car, are they saying, like, if I lease the BMW, I'm paying this, versus, like, if you own it, versus, like, when you're finished paying it off? Like, what happens if I buy the car all cash today? Am I still subject to this $18 a month fee? Because I want to keep my
if you want the heat seaters, from my understanding at least.
This is crazy. Like all of this, like the whole subscription idea just is rooted around getting people to pay a monthly fee, no different than how we were paying our phone and cable bills. And for a while, also internet got bundled into that. And then Netflix had to come and give everyone the brilliant idea of, hey, if you can monetize something over a month basis, it doesn't actually matter what your margins are because you can, on a month basis, make up so much money. This is
exactly. It's really a battle of, long-term versus short-term thinking. These companies are thinking for the long haul. Bottom line is over the long term. And they're just trying to take advantage of people who have this fiat brain, this reptile brain that this society has served us up on a plate, instant gratification, and just not even thinking about the power dynamics at play.
How much of this, though, is on the consumer that, what's that old joke that like every family has that refrigerator that's from the 50s in your garage that's never broken down and still works to this day. But the brand new fridge that my parents bought like 10 years ago breaks down every maybe 3 years or something like that. And
Yeah.
these newer appliances were just worse. And over time, we have inevitably created worse products. And we've accepted that as the consumer rather than holding the manufacturers accountable, rather than saying like, why is it the vacuum from the 50s still works, but my vacuum built in 2005 broke down 10 years ago? How much do you blame the consumer for just not, and like, could the consumer, and how would the consumer hold the manufacturers accountable? Like,
That's an excellent question. So this phenomenon you're talking about is called planned obsolescence, right? Basically, they want to create products that you buy and they're going to expire within like a 2-week window that they've sort of mapped out on average by measuring the usage of the machines. And they sort of time it so that your machine will crap out like probably like a week before their next offering comes out. So I think we as consumers, obviously we always have the option to say, okay, no, I'm not buying a Tesla. I'm not buying a BMW. I'm not buying a Samsung fridge or whatever it may be. But at the same time, I think this is downstream of the behaviors in our society by cheap money, right? Like people are thinking in short terms. They're saying, okay, I'm willing to buy the cheaper fridge, even if it's going to last like only a fraction of the time, just because I need something now. And, we live in this debt-based society. We just want instant gratification. So we need to personally be thinking about, how we're going to interact with these companies, making smart investments in our, utilities and appliances like our cars and our fridges. We need to be thinking more in long term. What's going to be best? What's going to hold up longer? And there's a lot of difficulties in it because a lot of these manufacturers are doing it in lockstep. Everyone sort of knows what the jig is. But that's not necessarily true for everyone. There's definitely outliers, producers that produce more quality goods. It just takes more time to seek them out, and it costs more money.
Well said.
Of course, now at the very end of the segment, remember the other conspiracy theory that I wanted to go down the rabbit hole with you. So, on that note, instead of hijacking the new episode of Fedwatch, which will be coming after this upcoming commercial break, Evan, I'm putting you on the spot and saying you're going to have to come back so we can go down this rabbit hole.
I'm game. Let's do it.
We'll give you the final word, share any thoughts, and also please let everyone know how to stay up to date with both the work you're doing individually as well as the work of Zeus and all the great stuff you guys are cooking up over there.
Yeah, sure thing. So, I just want to say, thanks for having me on. If you were listening today, try out Lightning. Really recommend any of the wallets I mentioned. Try not to go custodial. Go more for like a Moon with 2 U's, Breeze, Phoenix, Blix. You don't have to use Zeus out the gate. But try to push yourself. Stay curious. Go down as many rabbit holes as you can. And ultimately just find a solution that you're comfortable with and join us on the Lightning Network. You can follow all our updates for Zeus at zeusln.app. That's the website, zeusln.app. We're ZeusLN. The LN stands for Lightning Network, of course. ZeusLN on Twitter. You could also follow me on Twitter. I think my tag's right below me. Evan Kaloudis on Twitter. Yeah, my DMs are open. So if you have any questions about this, feel free to reach out. We also have, dedicated Telegram, dedicated Slack. You can shoot me an email. Just want to help on board as many people as I can. And, just get as many people using Zeus as possible.
Fantastic, man. Thank you so much. I'd also recommend go search YouTube for Evan on the panels that he did at Bitcoin 2022. They were fantastic about mobile wallets and Lightning Network security with a number of other really, really amazing people. We're going to go to commercial break, and then we'll be right back with Fedwatch.
And if you are not yet already, subscribe to the channel below. I will one day figure out where the subscribe button is. It's down there. Press the button. Do it. We'll be back with a new episode of Fedwatch. Welcome back, and I now give the mic over to Ansel for a new episode of Fedwatch.
What is up, everybody? Welcome back to another exciting episode of Fedwatch. My name is Ansel Lindner, and today we have a awesome guest. Joe Carlasare is joining us. Joe, how are you doing today?
I'm doing great, Ansel. Thanks so much for having me on.
Now, I think you're a perfect guest for Fedwatch because we try to question the narrative, not only from the traditional financial press and all that and the Fed, but even the mainstream Bitcoin narrative. So you have a lot of insightful content out there in Bitcoin. Your Twitter feed is, criminally underfollowed. So everyone should go over there and follow you on Twitter. But Joe, can you give the audience a quick introduction and tell us what you do in Bitcoin?
Yeah, absolutely. So I am a commercial litigator. I have a practice group specialized in litigated disputes involving Bitcoin and also our friends in the broader crypto market who were trying to get to be Bitcoin only. So I help people across the spectrum in litigated disputes with a Chicago law firm of Smith Amundsen. Aside from that, I'm an armchair economist. I've been following financial markets since grade school, trading with my father on a custodial account, and really just an avid Fed watcher. I love this show and many others, follow it very closely. And what I've tried to do basically since university, since studying economics formally, is really understand the plumbing of the financial system, understand what drives our economic markets. And I've always sort of had a knee-jerk reaction in opposition to the sort of mainstream narrative that I think that's pushed out a lot, that the Fed is at the center of the world, that they control everything, that they are, the Wizard of Oz, able to manipulate markets. To me, I don't think that's ever made a lot of logical sense. So if there's one thing I always like to question and one thing I like to contribute to Bitcoin, as you and many others do, is to get people to question, really, what is this entity? What is its force? What are its limitations? What are its abilities to actually change what's driving the heart of the economy, which is too much debt, poor demographics, and all the things that make us be inherently less productive as we were maybe even 30, 40 years ago.
Yeah, I think you have a very unique perspective, especially in your job that you're doing there at the law firm. We were chatting before the show, and that's a part of the market that I never see. And we kind of worked out. Maybe this is the cycle where a lot of these companies are working and finding out what is going to work with Bitcoin contract wise, miners and all this. So can you maybe fill us in a little bit more on that side of the house?
Yeah, absolutely. So, what we've seen over the last several cycles, if you call them that, is you've seen a maturation of Bitcoin, where first and foremost, you saw guys that were trying to put together mining deals, and it was very much the wild, wild west. It wasn't formalized. It wasn't something where they tried to put pen to paper and draft out real good agreements and contracts and those sorts of things. And you saw a flurry of litigation early on because, as is expected, people overpromise and underdeliver on their obligations. So it's interesting in my line of work in the bull market. It's amazing because you got a bunch of people excited and starting ventures and companies and trying to grow and pursue entrepreneurialism. But now everybody's mad at each other, right? You didn't give me my miners. You didn't. You stole this site out from under me. You did some inappropriate thing, and now I want to sue you. So in many ways, my line of work has been even more busy since the bear market started because people are really frustrated and angry and feel like they were ripped off in a lot of respects. But the big takeaway, I think, is this. We're entering a precipice here where the entire Bitcoin industry is maturing, and we're evaluating this and making really smart decisions. And I think that partially was responsible for why we didn't see this blow off top that many people were expecting, Bitcoin over 200, 300. I think just you're getting market participants that are more sophisticated, both on the investment side and on the entrepreneurial corporate side. And most of the gambling, the degeneracy, the nonsense, that's kind of still, unfortunately, in the altcoin market, and it's kind of dragging us down. But my view is that 5 years from now, the Bitcoin marketplace and market participants, particularly on the company side, are going to be extremely sophisticated, much more so than even now.
Awesome. That is great insight. So let's get into the macro conversation here with one thing that on Twitter that you seem to, you're really focusing on over the last couple of weeks is the yield curve, or maybe even last couple of months, is the yield curve. In the last 2 days, we've seen an inversion of the 2 and 10 again. So can you help us understand the yield curve and what it's telling us right now?
Yeah, in a very basic way. And I think, it's like that great line from The Big Short where, people in macro and finance, they like to throw out fancy terms just to the purpose of confusing you. All it really talks about when you're looking at a yield curve, particularly on the treasury market, what you're looking at is really the cost of capital, right? What is the cost of borrowing effectively? And when you see spreads between different instruments, what you should see is you should see a beautiful upward sloping curve, right? So that the more long end issuance, 30-year, 20-year, 10-year, they should always be yielding more than the short end, right? You shouldn't see the 2-year yielding more than the 10-year instrument. That doesn't make any sense because that would mean that there would be no such thing as the time value of money. So right now, to your point, we've got the 10 and the 2 inverted, and that shows you there is a problem in the credit market. Something is going on. It's sniffing out some reason why the demand for the 10-year is very elevated, but the short end, which is more responsive to Fed policy, is being artificially lifted up. So a lot of people focus on the predictive aspect of the yield curve, the fact that it can be pretty reliable in terms of a recession indicator. Once you get these sorts of inversions, like where we're inverted right now in 10s and 2s, I think the last time we saw that was in 2007. It was pretty good early warning sign that we might be nearing a recession. But aside from the predictive element of the yield curve, there's not enough emphasis on the prescriptive parts of it. It actually causes problems for banking institutions, lenders, companies that are trying to borrow, and you've got this really confused credit market. So from my point right here, I'm looking at the yield curve, and I think the takeaway is that long end is fundamentally rejecting the inflation narrative. It's fundamentally saying that the long-term economic growth expectations are weak, and we know this as market participants. That's why we're bidding up the 10-year. But at the same point, the short end saying, you know what? We think these guys at the Federal Reserve and other central banks, they're for real, that they're having an influence on the short end, and we're going to react to it. So they could probably keep us, artificially kept up for a little bit, and until something breaks. Or Alternatively, maybe something doesn't break, and that we can talk about that as a potential outcome.
Yeah, I think that's a great point about predictive versus prescriptive. I get frustrated with people trying to predict the future instead of looking at the yield curve and looking at the current situation and saying, what is this telling me about the market right now? I don't care about where it's maybe telling me about 2 months or 6 months or 2 years in the future, whatever, because nobody really knows the future. But what is it telling us exactly right now? And I agree with you. I think the yield curve is telling us that there is something fundamentally wrong. A lot of people, you mentioned there about uh, raising rates and Fed policy and stuff. Do you think that they can continue to raise rates, or is that the wrong question to ask?
I think
Should we? Yeah, go ahead.
Yeah, sorry,
No,
I
go.
chomp at the bit for that, and cut you off. I apologize. No, I think that the focus on the Fed is totally wrong. It is the mistake that people are making at this point. The Fed does not have the power to control this CPI wave that we've all been struggling with in across the world. They can't, like the old adage goes, they can't print more oil. They can't fix these different markets. But what I think the Fed is doing in many ways is they're focused it from the standpoint of trying to influence market expectations, trying to destroy demand, trying to engineer the reverse wealth effect to prevent people from spending. And the goal behind all that is in many ways an implicit acknowledgement that they don't control what really matters for CPI, that it's beyond their ability to really generate that. So I don't particularly care very much about what the Fed's going to raise 75, 25, 50. I think most of the market participants at that point think they're in full on hawkish mode, that they're going full throated to do whatever it takes to crush CPI. To me, I'm more looking at the forward indicators, and one of those is the long end of the bond market, and in particular the Eurodollar futures market. I mean, the Eurodollar futures market sniffed this out perfectly last December when the Eurodollar futures curve inverted, as was pointed out by Jeff Snyder and other commentators. That to me matters way more than what the Fed does, because those are real market participants managing huge amounts of capital. They're hedging. They're trying to make sure that the market, that they basically protect their finances. They protect their access to credit. They protect their ability to survive economically. Those actors, in my opinion, are far more important than what the Fed is doing. As I always say, and I probably have tweeted this out about 24 times, so apologies, Ansel, for having to read it again and again. But I always say the bond market and the larger Eurodollar futures credit market, that leads the Fed. They tell the Fed what to do, not the other way around. The Fed does not tell the credit markets what to do. They are led by the bond market and real funding issues.
Yeah, exactly. And right in your intro, you said you didn't like the idea that the Fed was in charge. So you haven't bought into the Fed mythology, is what you're telling me.
No, I don't buy into it at all. I think I use the Wizard of Oz analogy a lot, because I think as long as the wizard can convince you that he has all the power to cure everything, he can make you braver. He can give you a heart. He can do whatever he needs to do in the economy. But it really is just kabuki theater. It's all psychological manipulation. QE is a psychological manipulation. It is basically trying to say, well, we have this implicit backstop of unlimited power, unlimited liquidity, and we can inflate money in all markets. And it does, right? Like, there's no doubt that we've seen incredible asset inflation over the last 10 years because the market participants get the signal that is being sent by the Federal Reserve and other central bankers that we will backstop this. We have the power to stop anything that comes in our way. My question to people is, what happens when it stops working? What happens when they can't perpetually inflate markets forever, or at least manipulate people's belief that they're inflating markets? That day will come. That's the watershed moment. That's going to change everything in our game. That's going to be so bullish for Bitcoin when people finally realize that these guys you thought were in power, you thought controlled asset markets and everything else and every other aspect of the economy, they were never in power to begin with. It's just people believe they were.
What do you think about the idea that we're just following Japan's footsteps? A lot of people poo-poo that idea, but I think that Japan is our future. If we want to see where we're at in 5 years, just kind of look at where Japan is at today. What do you think about that?
I think we have structural advantages that Japan doesn't have. But I like the comment from the standpoint is I think what you should take away from the Japan parallel is that this can go on a lot longer than people think. And I know that's not what people want, especially in Bitcoin. We're all eager for hyper Bitcoinization and to shift rapidly to the Bitcoin standard. Yes, that could happen, but it could happen a scenario where these guys keep rolling out an alphabet soup of new programs and agencies and facilities with every single downturn, and you enter into perpetual cycles of volatility. My friend Matthew Pines and Bitcoin Tina, they talk about this phugoid cycle a lot, where you see, rapid price movement, volatility, risks to the upside and to the downside. And I think that if I were, my base case for the next 10 years is to expect high volatility in all financial markets. I think the days of just, slow, steady movement up and to the right, they're gone. And you as a market participant should expect wild volatility. And you should also expect unforeseen, unpredictable risks, many of which I think Bitcoin mitigates against quite well. And if you're interested in this, it's a Bitcoin Magazine podcast there was a Bitcoin Magazine podcast that Bitcoin Tina and I have recorded last month with CK. I think he's still editing it, and we outline our base case for the next 10 years. That should be coming out next few weeks here. So a little teaser for that.
Yeah, I can't wait for that. Now, that kind of doesn't square, though, with a post GFC normal. So we were talking a little bit before we came on here, and my base case is just returning to low growth, low inflation, just like we've had since 2008. And but the volatility that you're talking about doesn't seem to fit into that paradigm.
Yeah.
What do you say about that?
Well, I think it does, and here's why. I think the problems are going to rear their ugly head this decade first in the emerging world, and we may disagree on that. I'm not quite sure, Ansel, your view on that, but I think that you're going to have a lot of folks that don't have the benefit and privilege we do in the United States and other Western countries of being able to control at least some aspects of our financial plumbing. These guys are much more dependent on what the West does. And in that dynamic, when you have geopolitical instability abroad and you have wild volatility in those markets, it's very hard in our system, which is interconnected, for some of that not to bleed over into U.S. financial markets. So what I would say is that volatility abroad, that's going to be the sort of the canary in the coal mine, which is going to lead into our markets, and we're going to have to respond extremely quickly to try to stabilize what's going on over there. I was in a discussion earlier today about, is the Federal Reserve going to end up buying JGBs? Things like that. Like those sort of questions, I think, are going to be recurring issues that we're going to have to deal with because, in my view, yes, we're going to have weak, low, anemic growth, but there's far more of a risk of a deleveraging event or a liquidation event in some of these foreign countries, emerging markets in particular, over the next 10 years.
Yeah, I saw that on Twitter there. I would think that we would just buy yen before we buy JGBs. And I think that could stabilize some of the situation over there. I totally agree. I think emerging markets are going to fall off much faster because I think, well, the main reason why emerging markets have had the 40-year run that they've had is based on the Eurodollar system. And as that's grinding down, the credit bubble will pop first in those emerging markets and it'll work its way towards the interior. I've also talked a lot about the ECB and the euro here recently on the show with fragmentation risks. Do you have any comments on maybe the differences faced by the Fed and the ECB?
Well, the biggest difference is this issue with their anti-fragmentation policy, where they've got countries with various different bond markets and the finances and debt levels, and this has been always sort of an uneasy alliance with the EU. How they're going to navigate this space where everybody's not Germany, right? Everybody doesn't have the strength of some of the stronger EU countries. So I think they have got a really tenuous bond there. It'd be like in the United States if if Texas, had the ability to had a difficulty financing something versus Illinois, right? Like you had this myriad approach, and that the Federal Reserve is going to have different monetary policies in some states versus the others. We see a little bit of that, with our state governments, but I think it's much more pronounced in the EU. So from my standpoint, I think that the EU's biggest problem is not actually a monetary or financial one; it's a political one. How to get people to in positions of authority in the EU to willing to develop different policies that are perhaps not advantageous to their own citizens for the sake of stabilizing the entire EU. That's a very difficult political tightrope to walk.
So am I reading it right that you expect Europe to have more troubles over the next few years? And my argument would be that would bolster the U.S. dollar and U.S. stock market and those types of things. Do you think we're going to see capital flight into U.S. dollar denominated assets and Bitcoin? We can tie Bitcoin in here too.
I think you already see it. I mean, given the amount of wealth destruction and the fact that you've got an S&P 500 down, like 20%. I mean, you're seeing all sorts of parallels between very rough times financially, and you still have elevated asset markets across the board. I mean, we haven't even gone back to the pre-COVID peak on the S&P 500 and many other markets. Yes, there's been individual stocks that have been down, but Lynn Alden has this great article called The Capital Sponge. I would encourage everyone to review it and look at the fact that the U.S. has been sucking in more and more capital globally over the last 10 years. And that's why you've seen this unprecedented rise in financial markets. So from my standpoint, I think that's already occurred. I expect it to continue. I know that there are many in Bitcoin who, predict the imminent collapse of the dollar and hyperinflation and all these things. And I'm not saying that we don't get there eventually, but for the foreseeable future, if you're a capital allocator and you're going to put significant sums of wealth in a country, where are you going to put it? Russia? China? What is the alternative? Right? Unfortunately, the way the system is constructed, U.S. capital markets are the biggest game in town. Maybe they lose some of that market share over the next 5 to 10 years while people, they're more cognizant of the risks of seizure of FX reserves like in Russia. It's very possible. But these things happen very gradually. They don't just, flip a switch and now the entire Eurodollar market is just evaporated. I think that's extremely unlikely. Very low probability of occurring, if that makes sense, Ansel.
Yeah, absolutely. And I've been fighting against the inflationist here on this show. A lot of people look at like Weimar Germany, and that lasted 2 or 3 years. And people envision a hyperinflationary end to the dollar. And I've been saying, no, this is going to be a deflationary end to a credit bubble. And I do expect a lot of capital to flee over there from Europe to the US. European stocks have not really taken a hit. I think they're even year to date higher than the US stock market. So
right.
I don't think that we have seen a ton of capital flight yet, but we'll see. That's part of my thesis, at least, is why I'm more bullish on US than Europe or China. We see a lot of similar things going on over there in China. But let's go into commodities, because when we talk about Europe, we have to talk about the energy crisis. And we have seen commodities topping, right? Some topped back in March, right after the invasion of Ukraine, but some have topped in the last few weeks and started selling off. This does coincide with the DXY screaming north. So what's your thoughts on DXY and commodities?
I think there are a lot of factors driving commodities markets right now. First and foremost, I think the biggest factor driving them is they were the place to hide. They were the trade of a preference for hedge fund managers and financial actors for the last 6, 7, 8 months, perhaps even longer. People were hiding in oil stocks and energy, and they're kind of the last one to roll over as the economy approaches what looks like to be a recession. And that's very typical, right? You kind of see that last hurrah, that inflation burst you get pre-recession. But now they've all roll over. I mean, I was looking at wheat, copper's back to like 2020 levels, and oil. All these things are telling you that the base case moving forward should be slow economic growth, and that's frankly that's the demand destruction the Fed wanted to engage in. So you've got the first two factors. Just to summarize, you've got the speculative traders who piled in saying there are commodity shortages. In many ways, the paper futures market is way bigger than the spot market for a lot of these commodities. So that adds as an artificial bid. It pushes the prices up very quickly because guys pile on because they spot that shortage and they had good intel. That's kind of falling apart now. They're bailing out of those positions, so that's going to be downward pressure. But the real economy is also a force against these high commodity prices because that's the demand destruction. But then finally, as you point out, the dollar. I mean, the dollar at what was the DXY at? I think yesterday was 107. Correct me if I'm wrong on that.
108 I got to, I think, yesterday.
108. Yeah, I mean, that is catastrophic for emerging markets. I mean, it is really putting the pressure on them. To be honest, I'm actually surprised things have held together so well with some of these. I mean, again, there's a huge lag effect. The economy is not a light switch. You don't just flip something and then all of a sudden you have the consequence. The consequence can be borne out over 6, 12, 24 months. So maybe we'll see that over the next year or so. But yes, I mean, those three issues that I outlined, to me, tells you that the future outlook, the future narrative is going to emerge is not going to be one about high CPI. CPI can still remain elevated. Prices can remain elevated, right? But it's not going to be the burst we saw of last year because people are really struggling to deal with the prices and the fact that you've got a dollar that is just raging.
So CPI comes out tomorrow. Do you have any predictions on what we're going to see, an overshoot or an undershoot?
Well, the White House came out and they said that they expect it to be really elevated. I think you'll see it quite elevated. I don't think the consumer prices are going to come crashing down in the next month, 2 month, 3 month. I think that their rate of change is slowing. I think that's the big takeaway. Whether we have month over month of 0.3, 0.4, anybody's guess. But what I think the real growth narrative is telling you is that the economy is weak. And in a weak economy that is not subsidized with fiscal support, you could expect demand to be destroyed. So I expect that if CPI doesn't roll over soon, it should roll over somewhat. And again, we're talking about the rate of change, right? So the prices you pay at the grocery store, the prices you pay for gasoline, they could very well still remain high. But if the rate of change doesn't increase, CPI is going to go to zero. For example, if you have, just think of basic, if you go and you buy your groceries and you pay for gasoline and these things, and it remains flat for a year, CPI goes to zero. Right. So I don't think with declining economic growth expectations, you should expect CPI to print again these year over year 8%, 9% numbers in 2023. You may print a higher number, or excuse me, a high number by historical standards, but it's not going to be what we saw this year.
Yeah, I try to argue with people about the price of oil. Everyone tells me that there's so much money printing out there. And I say, well, oil is way below where it was in 2008, right? So overall, I think we can see prices going up, but not just that your case where it levels out to zero. I think we will see some negative prints. And the higher the CPI, the lower the real GDP will be. So
right, that's exactly right.
I think that can really shake the market. That's going to shake the market more than the Fed raising rates. So like you say, the Fed is kind of impotent here. Really, the recession is what's going to shake the market, I think.
Yes, I think that's right. And then the question I think it's becoming conventional wisdom that the U.S. is either in or headed towards a recession. I don't find many people outside of policymakers who have to deny the recession until it's impossible to deny it further. I don't see many of them denying the slowing growth. The question I think that we should all be focused on is, what does it look like if the labor market remains tight, you have slowing growth, and prices still remain elevated. What is that going to be something where the Fed, everybody's dying for this quote unquote Fed pivot? Is that going to be enough for them really to move with a tight labor market, employers having, this wage price spiral that the Fed seems concerned about? I don't know. I mean, I could see a scenario due to structural issues in the labor market that unemployment remains relatively, low, and you don't have a massive layoffs and job cuts because people are really in high demand. I mean, my clients talk about all the time how they're struggling for good employees, particularly skilled employees. In that dynamic where you have structural low unemployment, excuse me, and you have the higher prices, consumer prices, PCE in particular, and you have slowing growth, I'm wondering if the system can withstand that, if you're not going to trigger some sort of deleveraging event, which the deleveraging event, that would cause, I think, a pivot. But short of that, short of markets in absolute free fall, to me, what keeps me up at night is the fact that the system kind of just chugs along, muddles along without something major breaking. And I think that's really tough because then you have a choice of, are you going to put your money in financial assets and financial markets that are going to underperform in that dynamic? Or alternatively, are you going to just hide in cash, which is eroding at a really high rate given the prices that we're seeing? So it's a terrible, terrible situation for any sort of saver or investor. I would much rather something break. I would much rather there be a strong deleveraging liquidation event in financial markets, because I think that would convince them to stop messing around with this, kabuki theater that they control the CPI or control inflation.
Yeah, and that kind of makes me think of the first question that we talked about, the yield curve. Well, could the yield curve call their bluff? Because, the short end being controlled more by Fed expectations, if they pushed it really negative or really inverted, hardcore, even 0.5% maybe on an inversion between the 2 and the 10, that could cause something to break, couldn't it?
Absolutely. The 2 and the 10, and the one that I look at even more that I think has the better track record historically is the 10-year 3-month. Most of the original literature about yield curves, predictive ability for forecasting recessions was focused on the 10-year versus the 3-month. The 10-year 3-month spread as of right now, I'll give you the real quote, is 74 bips, right? It's fallen significantly. It's down today about 20 bips. I want to see that invert. I mean, that to me is going to be an extremely powerful indicator. When that inverts, I think you can expect something coming in the way of new Fed policy. But, it still hasn't, which means we could be still a ways away from some sort of policy change.
All right, so let's take this into Bitcoin.
Yes.
Bitcoin has had this inflation narrative for a long time, and I think we both had our own battles against the inflation narrative. I think it's very dangerous. I've talked about for a long time how once the world realizes we're actually in a deflationary environment, that Bitcoin's going to lose a bid because of all this inflation talk over the years. So are all the models dead for Bitcoin, or is there something that we can look at as a narrative in this time for Bitcoin?
Here's the narrative, Ansel, and
Okay.
I'm going to thread the needle here. Stick with me. So I agree with you. I mean, the fact that we still have to debate the structural deflationary environment that we're in, even if consumer prices remain high, you've got a structural deflationary environment because of the debt levels and demographics. And
Yep.
let me just be very clear on this. The amount of debt we've racked up in itself, even QE, as Jeff Snyder points out, they're deflationary forces, right? They are not the powder keg that would cause hyperinflation in the developed world. They suck for people paying for gas and food, but they're deflationary impulses. Debt, demographics, poor demographics, and digitization. Those three things will continue to override the whole narrative that you see in these consumer prices. And what that basically means in a very simple way is that you should expect weak, anemic, post GFC type growth moving forward, or worse, right? Even, terrible growth by historical standards. So what is going to be the inevitable conclusion there, where you have debt, poor demographics, and digitization, which is causing a deflationary pressures. You should expect long end yields to fall, okay, consistently fall, to the point where I think I agree with former Fed Chair Alan Greenspan, where he said that it's only a matter of time in the United States before we get negative rates. Now, where does Bitcoin come into this? At a certain point, it becomes politically unacceptable and difficult to get long end yields to fall, even with this deflationary dynamic. You can get, we had parts of the world that have negative rates and negative nominal rates. I think U.S. will get to negative nominal rates, and in that environment, bearer assets become extremely attractive. The ability to custody your solution in Bitcoin in an currency that cannot be debased, that is so valuable in that dynamic, because once you get to the lower bound, you have to rely increasingly on fiscal authorities to spend money. That's why I think, and I've said this often, I think UBI is inevitable in the entire world. They're not going to let citizens starve. They're going to go further than the QE psychological manipulation. They're actually going to spend a lot of money. They discovered this during the pandemic in the United States with these stimmy checks, which were extremely politically popular. They will continue that in mass by spending more and more and more and giving it direct cash infusions to people to spend it. And this is the big thing. To light the fuse of an extreme inflationary environment, you have to give cash to people that are going to spend it instantly, like they did with the stimmy checks during the pandemic. So I think we get there. I don't think we're there now. I think that comes. And in that environment where they're giving direct cash transfers to most of the Western world, boy, that makes me more bullish for Bitcoin than anything else. I think that if the policymakers take those steps, you're going to see Bitcoin's price absolutely rip. Forget all these models that tell you worthless. I always think it's kind of, as an aside, I think it's kind of silly, these arguments that say, oh, in 2035, Bitcoin's going to be 10 million, 20 million, 30. That doesn't tell you anything, right? Like, what's the purchasing power going to be of 10, 20, 30 million dollars in 2035? It doesn't give you any valuable market information. What I always ask is, tell me how much oil I'm going to be able to purchase for Bitcoin in 2030. Tell me how much real estate I'm going to be able to purchase. That's the key thing. So forget the dollar equivalency for a second. Look at where Bitcoin plays in this market, where policymakers are forced to one conclusion, which is to spend a lot of money on the fiscal side.
Isn't that an inflation narrative, though? Like, eventually will end in inflation. I like to make an argument about how Bitcoin can win during the deflation. Or did I just not understand that argument?
Well, I think it can win during the deflation because of the counterparty risk elements of it, your ability to safeguard your money and keep it in cold storage, and know that the Bitcoin you have self-custody over is yours, and you can control its destiny. That's where I think it really it's fantastic. I mean, having to rely on third parties, I don't care what it is, stocks, bonds, bank accounts, it doesn't matter. If you can't self-custody it in a deleveraging event, in a deflationary event, it's going to be just an IOU that you can't count on. So I think it wins there, particularly in emerging markets. But I do think that the inflationists aren't necessarily wrong. They're just extremely early, and there's a whole 10, 15 years that can play out in between there. The analogy that I'll use, and I use this with Bitcoin Tina in our forthcoming podcast, is like, imagine you're at the south end of the Grand Canyon looking across, and that we get across to that Grand Canyon, that it's coming, you're going to get to the other side, but you're ignoring the treacherous path in front of you, that there's a giant hole you have to navigate and make yourself through before you get to the other side. That is the way you have to look at Bitcoin right now. You can't just say, well, this is protection against hyperinflation. That we're a ways away from that, guys. There's steps in between for the dollar specifically that have to happen before that occurs.
Yeah, I just don't think the dollar can hyperinflate or inflate to a very high degree, being credit-based money. I think you
with
have
UBI,
to,
even with UBI.
I mean, how are they going to pay for that? They're going to borrow it, so they're going to add debt, so that they net it won't be inflationary. I mean, in the short term, but not in the long term. In the long term, you can't stop the credit bubble from deflating. So the end is a deflationary grind. And see, that's why I think people will go into Bitcoin, because Bitcoin, like Jeff Schneider talks about the dollar shortage all the time.
Right.
I don't think it's necessarily a unit shortage, like a dollar unit shortage. It's a shortage of monetary value, liquid
Yes.
monetary value. And if Bitcoin, or it can, its market cap can expand by 100 times right now, it can fill a lot of that liquidity gap that's in the world for monetary value. So, yeah, I think
But
the
that
dollar.
monetary, sorry,
Go ahead.
Ansel, that
No,
monetary value is credit based, right? So this is the difficulty with it, because one of the reasons he talks about like collateral shortages is because that collateral is important for rehypothecation, to generate loans, to generate credit, and Bitcoin, unfortunately, I think is fundamentally incompatible with a credit system in the long run. I don't see a system where you have as prolific credit creation under the Bitcoin standard. You will have some, likely, especially in the near term and foreseeable future, you're going to have credit creation. You're going to have Bitcoin, sort of melding here. But ultimately, when you have a bearer asset like that, a hard asset, it acts as a check on private credit creation. And the reason why I think the dollar shortage is significant right now is because what you effectively see is you see a shortage of the collateral necessary to generate credit, which is what drives the dollar shortage.
yeah, but that is it's a problem with the form of the money.
Correct.
Yeah. So I think
which is credit, right?
Correct.
So that's our money. Our money is credit. We live in a credit-based system.
Correct. And it would solve itself if you could just let it deflate, right?
Yes.
Like we've had in the past. But we can't do that because it's all credit and it would deflate to zero. So I think Bitcoin is they will be able to push it off forever. And so I don't see a hyper deflation or hyperinflation. That's where hyper Bitcoinization comes in before we get to either of those goals or ends.
Yeah. Well, I agree with you there. I agree with you on the conclusion. I think this can happen quickly, where Bitcoin, the focus on Bitcoin at this point, I think, is sort of confused, because I don't think most people understand Bitcoin. And that's why this show is so valuable, and your insight, Ansel, is so valuable, because to really understand Bitcoin and the unique promise of Bitcoin, you have to understand the bigger picture and the bigger global credit system. If you don't, you could be confused very easily as to why Bitcoin's important.
Yeah, exactly. Thank you. Thank you for the compliment, Joe. Let's get onto some maybe what we can see in Bitcoin specifically. One of the things I've thought about is, you talked about the change in the market participant structure. More professional market participants are coming into Bitcoin, but a lot of the Bitcoin narrative is based on this unbanked thing. Bitcoin will bank the unbanked, and it's the plebs. And I don't have anything against the plebs. I'm one of the plebs, but should the narrative, or would it be more beneficial? Would it benefit Bitcoin if the narrative shifted to like, hey, the institutional DCA is where we need to be concentrated versus a retail side DCA? Any thoughts on that?
Yeah, no, I totally think that's really wise, in terms of how do we get to, a 10, 20, $50 trillion market cap. It's going to be the big actors, right? And unfortunately, and I don't mean this in a belittling way, but a lot of these unbanked folks, they just live hand to mouth. They don't have a lot of capital. They're not going to be significant sources of purchasing that's going to drive us to $500, $600 million Bitcoin. I'm not saying it can't help, but it's not where the money's at, right? Like the old adage, why do you rob banks? Because that's where the money's at, right? You need these big players to come in and recognize what this is. Now, what I will say that I'm really excited about, and I think it isn't talked about enough in terms of a narrative, is I'm very much excited about Bitcoin and the Bitcoin network as a whole driving forward and strengthening the dollar. And Michael Saylor's talked about this a lot, but the idea that the Bitcoin network can put dollars digitally in the hands of everybody across the globe. I'm not talking about a stable coin. You could do this running on the Bitcoin network if banks and other institutions integrated the Bitcoin monetary network, the world's strongest monetary network, as a backbone. They can do instant settlements and movements of dollars abroad. The only thing that stands in their place is not a technological issue, it's a regulatory one. If you have Bitcoin loans, Bitcoin amounts of money being sent all across the developed world, those folks can get access to actually dollars in accounts as long as the regulation catches up and allows the Bitcoin monetary network to serve as the backbone for settling the transactions. It's the world's most efficient messaging monetary system in the world, and it really should, in my view, promote the dollar, increase dollar hegemony.
That's very interesting. So, what is he talking about? Like color coins, or is he talking about liquid or lightning, or
No,
what?
you don't need any of that. You don't need any of that. The way you can do this is similar. It's basically a product of what like Strike does. Okay, so the way Strike sends money abroad using Lightning and other things, they have an exchange partner where, if you have dollars in an account with a U.S. regulated bank, and you want to send it to your family or friends over in Europe or in any other country, what they do is you hit the button and send, and then the back end, you go from $100 USD in a banking institution gets converted to Bitcoin, a Bitcoin USD pair, and then on the other end, it gets from a Bitcoin to Euro pair, or a Bitcoin to yen pair, or Bitcoin to any currency pair, and you've moved the funds over Lightning or Bitcoin, depending on which one the banking institution is needed, in a very short amount of time. They've got instant settlement, and they can give access to those dollars through the use of the BTC pairs with their fiat pairs into someone's account. So if you're in Zimbabwe, there's no technological reason why, if you didn't have an exchange in Zimbabwe, an exchange in the United States, and affiliated banking partners, that money can be sent to Zimbabwe for virtually nothing. If the banks were to implement Bitcoin as the monetary network, the means of transacting with those Bitcoin fiat pairs.
I see.
So anybody could have an account, right, Ansel, with dollars, actual U.S. dollars that are transferred using the Bitcoin monetary network, not a stable coin.
Yeah, well, that does bring up stablecoins though, and CBDCs. So I've been saying that the Fed is going to be stiff arming a CBDC because they have Tether, but the ECB needs a CBDC because no one wants the Euro Tether. So, do you have any thoughts or insights on if CBDCs are coming anytime soon and what their impact will be?
So President Biden signed the executive order where he asked the Treasury and a joint committee to look at the implications and viability of a CBDC. The Federal Reserve did their own study. The Federal Reserve study found some utility in it, but it was sort of lukewarm. It was a tepid endorsement of a potential CBDC. But importantly from the Fed is that they have been consistent through multiple publications right now that they do not believe a CBDC can be enacted absent specific legislation empowering them to do so from Congress. So what does that mean in just simple terms? It means that the Fed wants the Congress to pass a bill. They want them to specifically endorse a U.S. CBDC. Whether that gets through the Congress anytime soon, count me as someone that's highly skeptical of that. I don't think you get anything through the remainder of this year while there's an election going on. Maybe you get an effort for some sort of digital assets bill in the lame duck. I think it's unlikely. And then you could very well have a whole new host of leaders in Congress. We'll see what they want to do, if they want to even get into a CBDC into the next session. But if the Fed is going to be resolute in their position that they want a congressional authorization to enact a CBDC, count me as someone who's very bearish on the idea that a CBDC comes to market in the U.S. anytime soon. Europe, to be honest, I'm not as up to speed on what's going on there. I do understand why they would want to bring a CBDC to market. I continue to think that you're going to see experimentation of these things outside the United States far earlier than you see anything with the U.S. in terms of a CBDC.
Awesome. Great answer. Getting back to the depression question, and you've talked about this a lot in the past, the altcoins versus Bitcoin, and you don't think altcoins are going away. But
no.
my thought is, like, is the depression going to be bad for altcoins because they really derive a lot of their momentum from retail traders. And I mean, yes, I've heard you say in the past that stimmy checks were spent a lot on stocks, and they're probably spent
Yeah.
a lot on NFTs and that kind of thing too. But is a depression maybe somewhere where Bitcoin can decouple from altcoins?
I hope so. A knock on wood. I'm very much skeptical. I think that and again, we use these terms like depression, and I think to have any really good dialogue and conversation back and forth, it's important to define that. When I think about a depression, just in my mind, and I know there's technical definitions and what that really means, I look at it as a significant hard down move in financial markets, right? Where it's not 10%, 20%, 30% even down, which historically is pretty run of the mill. I look at fundamental breakage in our banking system or in the credit markets, banks refusing to lend, those sorts of activities, and also stocks in free fall. I think that prior to a quote unquote depression, you will see policymakers, both on the fiscal and monetary side, intervene and throw everything possible at the wall to try and get things afloat. In that environment, I think you have more of the same with the sort of COVID type impulse where you have a ton of money being spent, you have a ton of cash going in the system, and it will lift the price of everything. In particular, people that don't need that money, they're going to be investing in gambling and these stupid things. So count me as bearish on that. I don't believe the SEC understands fully the best way to go after this market. I don't think that they're going to come in and crush the altcoin market anytime soon, unfortunately, because I do think it's rife with fraud and bad actors. But what I will say is that what could cause it to change? Let's steelman the other side. What could possibly cause Bitcoin to rise in an environment where there is a depression, a hard downturn, and you have real significant inflows of capital into the market? I think in that environment, if there is uncertainty regarding counterparty risk, right? If you have capital controls on things like banks or brokerages or money markets, you have people start to really say, wait a second, I can't get access to my funds now, and I need them, and I don't feel comfortable. If that happens in mass, and I mean significant, I don't mean like one bank saying, we're closed up for 12 hours and you have to get your money on Monday. I mean, it's persistent common theme where it gets into the public consciousness that, wait a second, I'm being denied my hard-earned finance or financial wealth. I'm being restricted in that, similar to what was going on in Canada, right? If that happens and it becomes a regular feature, then to your point, I think that changes the game. I think that the public consciousness will pivot at that point and realize that I'm done. I'm absolutely finished with dealing with custodians for something I worked hard for to earn.
Yeah, I think it's very important that we define what a depression is because, like you said, yeah, if we're talking a massive 50-75% sell off in stock market and asset prices and stuff, and bread lines like we saw during the Great Depression, I agree with you on everything you said there. But what about if we just see the post GFC normal again? Growth at 0%, with the labor force participation rate increasing or decreasing, right? So unemployment might not change, but the labor force participation rate is going down. Could we be in a depression already? That it's just that recession after recession after recession.
The Emil Kalinowski, the silent depression, right? That we've been in since the great. I think he's right. I mean, like you see it with people in their reaction and ideas about work, and I think younger people, they are completely soured on the whole system. You saw people that we still are struggling to get people to return to the workforce from COVID. Since COVID began at certain levels, particularly in the minority community, we can't get people back in to think that this economy gives them a real shot. So yeah, I think you can make a case that the silent depression is here and that it's been here for a while. And I know there are people, I deal with them all day long on Twitter, that say that this is the big one, the big collapse. Well, what if we've been living in it for the last 5 years? and it's it's the slow boil of the frog, right? And I think that, to me, I'm very sympathetic to that view. I think that's far more likely than people tell you.
All right, so we're coming up on 5 minutes left. So let's. I would love to just summarize what are some narratives Bitcoin can count on going forward in these times where we're facing recessionary pressures and we could be going into a global recession. Very big down moves coming. The future for Bitcoin doesn't look bright, at least in the near
I disagree.
term. Right in the near term,
I
I'm saying.
disagree.
Okay, so what can we take the going forward? What are some new narratives to summarize those here?
I think one of the major new narratives that every single Bitcoiner should focus on is how important being able to self-custody your Bitcoin is. The unconfiscatable nature of Bitcoin, as Tone Vays coined that term, I think. I think it's spot on. I think it's probably the most important feature, because you and I both know that when these policymakers realize that they are woefully unable to deal with the real forces driving the economy, which we've talked about at length on this show, they will throw anything they can at it to try to get control. They will throw confiscatory policies at it. They will create new rules about everything from 401ks, IRAs, everything that's a traditional feature and tenet of our financial market. Yeah, ETF. I mean, that's the other thing. Like, so many Bitcoiners clamoring for the ETF. I'm like, I'm so glad there's no ETF. I think it's fantastic because it gives us more of a runway to get people to understand and self-custody their Bitcoin. I hope every day that we, if you want to do something as a Bitcoiner, just teach one person how to self-custody their Bitcoin in a responsible, realistic way. Everybody can do that. It costs nothing but your time, and you can help Bitcoin prosper. That alone is the most bullish thing about Bitcoin. And once you get people to realize the power of having control over your own sovereignty and your own coins, the fiat value of Bitcoin, the fiat exchange rate, it almost becomes immaterial in a lot of ways. I mean, it's just like, wait a second, this is unlike anything else out there. Any other asset, real estate, bonds, stocks, everything, even gold and dollar bills, right, under your mattress, somebody was saying in the chat, that's terrible. I don't want to sit and live with, significant sums of money in cash underneath my mattress. I mean, that just seems totally unreasonable for the internet age and irresponsible in many ways. Now, a multi-sig solution for safeguarding my wealth, I'm comfortable with that. I sleep like a baby with a multi-sig set up in a correct way. And once people realize that, and once people realize that in the markets where there are going to be governments that are clamping down hard, I think that, don't worry about the Bitcoin price and exchange value. It's gonna rip.
Awesome. So where can people find you, Joe? Where can they follow your work? You appear on a lot of different podcasts. So where can people find you?
Yeah, so I run a podcast with Neil Jacobs called Inside Bitcoin. We try to do weekly episodes just talking about the news. I'm on Twitter. Follow me on Twitter. I try to post informative content and challenge narratives that are out there. If you appreciate that kind of stuff, I'd appreciate a follow. If you have a litigated dispute, which I don't talk about enough in Bitcoin, someone broke a contract, breached a fiduciary duty, committed a tortious conduct against you, reach out to me through my law firm. I'm happy to chat with you at no cost to see if you have rights that were violated. Or if you're an entrepreneur building a business, I try to help anybody. You get the Web 5 discount for working with me to build out Web 5. I love supporting Bitcoin. So, and then also, I'm going to tease my podcast that CK is putting together with Bitcoin Tina. That's coming later this month, I think. I would appreciate if you give that a listen. I think you'll find it informative, and Bitcoin Tina is fantastic. Follow him too. And follow Ansel.
Absolutely. Thank you, Joe, so much for coming on. We're going to have you back on because a lot of this stuff like the yield curve and, just the entire Eurodollar system, we need to dive in and understand that better. And I think you are as expert as anybody that we could get on. So hope to have you back in the future. For you guys out there, you can follow me at Ansel Lindner. You can check out bitcoinandmarkets.com and sign up for my free Friday newsletter. Comes out over all the sectors of Bitcoin, including just a market commentary, a price analysis, and mining sector. And that's it. Back to you guys in the studio.
That was awesome. I'm also just going to put Joe on the spot and let him know that at some point in the very near future, he's going to get a message from P asking him to come back on this show. So just know that. that's
Brace
coming.
yourself.
Love it.
We are frantically working to make that podcast that Joe is alluding to sound sexy. CK is off on some secret island in a lab doing something or other. I don't know.
Boy. Oh boy.
I'll give you my hard shill. Bitcoin and Markets is truly one of the best newsletters. Like, just subscribe to it. 95% of my opinions are derived from Ansel. I just make them more smooth brained. So,
no altcoin shit.
Absolutely no altcoin. I have to find my altcoin shit coinery elsewhere. So that's where the other 5% comes from. Guys, thank you for joining us. Thank you for sticking around for all 3 hours of today's episode. We have a spaces later this afternoon with CK as well as some organizers of Bitcoin Amsterdam to actually talk a little bit more in detail about the ongoing protests by the farmers in Amsterdam. So if you're interested in catching that, I believe it's at 4:30 Central Time, maybe.
Don't know. Sounds right.
4:30 Eastern Time. So close. You guys keep changing the time zones on me. Like, West Coast is the best coast for a reason. So come join us on Twitter Spaces in like 30 minutes. That's a wrap, guys.
Thanks, Joe.
Thanks, everybody.